target for 2026 because earnings are simply moving higher. In the end, there's the real economy, very conflicted there, some squishy parts of the market. Clearly, the lower end consumer is under stress. The labor market equilibrium number is now lower, probably in the 50 to 70,000 jobs per month. No room for error. On the other hand, earnings are moving higher. So corporate America and large cap corporate America is able to power through it. The real economy is not the stock market.
This is the question for Chairman Powell, I think, going into Friday. Is he focused on the demand side or the supply side of what's happening in the labour market? An emphasis in a speech is always important. If he puts more emphasis on one versus the other, the market's going to read a lot into that about what to expect for September and beyond.
It basically lowers the threshold for just what kind of headline numbers there actually have to be if he emphasizes the demand side and not the supply side. If he says this is something more than just an immigration story and how many workers there is actual weakness in this low hire, low fire market, suddenly that payrolls report of 35,000 people becomes a lot more concerning.
Have you heard the story about the cart full of sticks and carrots pulled by the horse through the forest? Tell you that story another time. It's a fascinating one. Alicia, thank you.
You're killing me.
Alicia Levine of BNY.
I'll take classes.
You've got to put the 2 days together to really understand what's been going on.
I can't get expressions right. I'm going to have a tutorial.
But I enjoy that you try. I can't either, so I just don't bother. So I'd love to help you, but I don't know what you're talking about
We'll get cheat sheets.
I know. All right, OK. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. The White House is fast-tracking Stephen Miron's confirmation to the Federal Reserve to put him in place ahead of the FOMC September meeting. Politico reports Miron has been meeting with members of the Senate Banking Committee to greenlight his nomination ahead of the full Senate confirmation vote. The Senate is in recess until September 2nd. Meanwhile, Federal Reserve Governor Michelle Bowman said banks and regulators need to embrace new technologies such as AI and crypto or risk their role in the economy. Speaking to our own Mike McKee yesterday, she said she would seek to cut down regulatory scrutiny tied to reputational risk, suggesting new rules could be made. Bowman has emerged as a potential replacement for Fed Chair Jay Powell at the end of his term. And Real Madrid secured a win in their opening La Liga game of the season, defeating Osasuna 1-0. The star of Madrid, Kylian Mbappe, converted a 51st minute penalty kick to give his team the victory in yesterday's Spanish League opener. That's your Bloomberg Brief. John?
Yahira, thank you. Thank you very much. I was going through the injury list over at Real Madrid. That squad is absolutely absurd. Just some of the world's best players just out injured, and they can still put out an 11 that's just to die for.
Yeah, which just shows you how good their roster is. It also shows how hard they're being played. I mean, the number of games that they have to play, I just can't get over that.
I'm with you. To have a world-class squad right now, you need ridiculous depth to get through the average season for a top club now.
Yeah,
it's nonsense.
And depth of the pocketbook as well, which is the reason why.
Greed, Bramo. Greed of FIFA and UEFA of pushing this whole thing too far.
Yeah.
But it's a conversation for another time. I'm always shocked by the baseball schedule. I just think it's insane, the amount of games they have to play every single year.
Yeah, the number of games I have to hear about every single night at
Don't
home.
you think it takes something away from the games that you actually get to see, though? Like, let's say Yankees-Red Sox happen twice a season, home away. Like, that would be amazing, right?
What's that? You really hate that?
Instead of like
why is he talking about that?
50 times.
I'm sorry, I'll tell him to stop.
Is that the kids at home?
Yeah, exactly.
They want that.
They want as many games as you possibly can have, because it also democratizes the games, and they're great, you know, in terms of being able to have the access. Tickets are cheaper. Okay. You can go. The American sport, pastime.
Not trying to ruin it. Just, you know, just my view on things. All right. Up next, the Morning Calls Plus, Deborah Wideswick of Coresight Research with target shares down and a new CEO coming in. morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It is our expectation at Nomura that the Fed will cut in September and December. But even if they cut in September, it's then not going to necessarily be a slam dunk that there'll be a December cut. You have to look at, well, do we see signs of tariff-induced inflation coming? There's a lot of new information that we're going to get from the September 5th and September 11th labor market and inflation reports that we just don't have right now. And both of those reports come before the next Fed meeting.
That's David Seif of Nomura weighing in on the situation with the Federal Reserve. The calendar shaping up as follows. Payrolls on September 5th. A week later, we'll get CPI, and then a week after that, a Federal Reserve meeting. Equity futures on the S&P down by 0.1%. On the Nasdaq, we're down by 0.2. That's the price action this morning. Here are the morning calls. First up, Wells Fargo raising its price target on Home Depot to $450, saying category sentiment should improve. Your second call from Citi, downgrading Gap to neutral, saying specialty retailers are going to be challenged by tariffs. And finally, JP Morgan downgrading General Mills to underweight, writing the current environment is challenging for food producers. Let's stick with retail. Investors looking for signs of inflation in retail earnings ahead of comments from Fed Chair Jay Powell and Jackson Hole on Friday. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, we've seen some indications that there are price effects going through. Home Depot, most notably yesterday, talking about that. The real question is, how much do they have in inventory that they can sell at lower prices before they have to start raising them? We've heard from a number of consumer product companies that they're planning in September or October to start raising prices. So how much of a pass-through do we get in August that would show up in that September 11th report? That's going to be very interesting for the Fed. It may not be the bottom line number in terms of what year-over-year inflation is. It may be the underlying inflation indications of what's coming down the pike.
Mike McKee, just before you go, we're all looking forward to your coverage in Jackson Hole, but I wanted to take a beat. There was a man, they don't make hawks like this for sure anymore, Charlie Plosser, a gentleman that you know well. I had the privilege of speaking to on occasion. Confirmation in the last 24 hours that Charles Plosser passed away peacefully on Thursday, August 14th, at the Warner Community Hospice in Amelia Island, Florida. We knew him well as the Philadelphia Fed president, Michael, and that was a man who had his hawkish beliefs and stood by them. And I can only imagine what his voice would sound like on the FOMC in mid-September.
Well, I saw Charlie in July, and his voice was the same as ever, that the Fed had gone too far, that it needed to start dialing back its accommodation, and that it needed to start move faster to bring down the balance sheet, because Charlie was an old monetarist. He believed that too many dollars chase too few goods, and you get inflation, and there were a lot of dollars in the markets. So, yes, Charlie would have been a firm vote for Fed rate hold, or if the numbers come in a little hotter, or even a rate increase these days.
Mike McKee, looking forward to your coverage. Just a thought there on the late, great Charlie Plosser on the Federal Reserve. They were the days, weren't they? 10 years ago?
You didn't have groupthink. And
Absolutely
he was very
not.
much somebody who would have pushed back against some of the main belief right now that the Fed should start a real aggressive rate-cutting cycle.
Alongside, what was it, Richard Fisher?
Yeah.
At the time?
Yeah,
Someone you really enjoyed, right?
Such great essays. Fantastic.
Yeah. Different time. Where are those hawks on this Federal Reserve?
And do we need them?
Good point.
At a time of real political pressure.
That's the story for later on in the week. Let's stick with the consumer. Target warning shoppers remain selective in their spending. Coresight Research CEO Deborah Weiswick writing Target is under pressure, discretionary categories remain weak, traffic is down, and tariff exposure plus digital reliability concerns add to challenges. Deborah joins us now for more. Deborah, welcome to the programme. Do you believe, and just to sort of reflect on what we've heard from Target and other retailers, whether that's just a problem specific to them or whether it speaks to maybe a consumer under some increased pressure?
Well, first of all, thanks for having me on the show. And to answer your question, I think it's really a tale of two retailers today. If we look at TJ Maxx and Target, so both are off mall. And so really, truly a direct comparison. One saw Thompson, the positive territory, and one very much in the other direction, which was Target. And so I think that going back to kind of the tariff conversation where Target is very much vertically integrated, right? They sell a lot of their own product. There's no vendors to kind of push back on. Target's probably seeing, kind of pricing pressure and margin pressure that TJ Maxx isn't. But I think there's also a lot of execution issues that they're facing as well.
Can you give us a sense of what those are, Deborah? Because right now it seems like the market is responding to this prospect of more of the same when they were hoping for maybe a fresh look at some of the management of the company.
Great question. And I will say I'm very much in that camp. We've been very critical, I would say, at Coresight of their in-store kind of on-shelf availability, right? If it's not on the shelf, the customer can't buy it. So when supply chain as basic as that is not able to be executed, there are concerns kind of throughout. Also, their digital, kind of sales have been much weaker versus, I think it was like up a little over 4% for the quarter versus their peers. And as other retailers are able to leverage other sources of, whether it's data monetization, retail media, retail as a service, but Target is missing the mark there. And I do worry that not bringing in kind of outside talent is going to be more of the same.
Deborah, how much, when you just expand out to the broader retail industry, how much are all of these companies sort of an execution by execution story at a time with a pretty complicated economy and, frankly, a pretty discerning consumer?
Great question. If you look across the bow, if you will, I mean, Walmart, despite its size, right, has seen really, from an execution standpoint, high on-shelf availability, ways to, monetize not just in store or not just merchandise. They've also continued to elevate their leadership team and bring in fresh talent, very much focused on AI and how that can not only drive sales and execution kind of on the digital self, but also in the physical stores. And so I think you've got the shareholder, the, kind of your sales associate behind you to really drive that execution every day. And I just think when you look at Target, they haven't been able to do that. Expanding that over to specialty retailer, let's call it, mall retail, we've really seen unbelievable execution. I think a lot of it is how the malls or the mall REITs and the retailers in those malls have really started to kind of partner together on execution. And I think that there is going to be a bigger story here of the haves and the have-nots. This isn't based on income levels, although that's certainly a part of the story. It's really based on execution.
So, Deborah, there was a lot to unpack there. Just picking up on one point, how much are you going to hear? Who do you expect to be the winner in sort of the use of technology in retail to gain efficiency at a time where there are a lot of questions about just how much people are doing that? Who do you think is going to win?
I mean, right now it's Walmart. And I will tell you, that is not at all what I would have expected to come out of my mouth a year ago, just based on size and the complexity that you would need to hit fire on all cylinders based on that. I would have expected to see more one of the specialty retailers. But we've really seen, if you look across, it's been kind of like a Walmart, a Home Depot, a Tractor Supply. It's been these bigger off-mall retailers for the most part. And it really has just been this kind of intense focus on execution and leaning into technology, specifically Gen AI. And I think that that's going to, right, that's really just accelerating their growth. And also, I actually think the bigger thing here is it's allowing them to attract best-in-class talent. We're hearing that, kind of best-in-class data scientists these days are going to Walmart. They're not going to Amazon, right? They want to have this physical presence. They want to be able to kind of there's a pride that's taking place there. I think it's unlike anything we would have expected.
Yeah, Deborah Weiswick there of Coresight Research. Deborah, thank you. You've talked about this so many times with regards to Walmart.
You can say whatever you want about where the profitability is. The investment is actually, in some places, paying off.
Up next on the program, the brilliant Howard Marks of Oak Tree Capital. From New York, this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The opening bound is about 60 minutes away. Equity futures are negative by 0.1% on the S&P. We're down by 0.25 on the Nasdaq. Let's get you some morning movers and cross over to Danny Berger for more. Hey, Danny.
Hey, John. It's a tale of two retailers. For one, really solid results from TJ Maxx and an outlook that was better than expected. Those shares up 3.8% this morning, but some of the more value-oriented type retailers outperforming. Contrast that with what we got from Target. Target shares are plunging in the pre-market trade this morning. They are down by 10 1/3%. It was another weak quarter of sales, also reaffirming their outlook of low single-digit declines when it comes to sales. Also announcing the COO would become the CEO, saying in a statement that he is addressing matters with urgency to try to rebuild momentum. Finally, wrapping things up here with a Reuters report that Howard Lutnick is looking at other companies reportedly that have received money through the CHIPS Act and maybe taking a stake in them. You can see the negative reaction. For one, Intel falling this morning. We already know about what the government plans to do there, too. But the other two biggest recipients of the CHIPS Act are Micron and Taiwan Semiconductor. So those shares falling 5% and 1%, respectively, John.
Danny, thank you. How is this going to work? Huge focus for us over the next, never mind several months, several years.
How do you have a grant that gets transferred into a stake, an equity stake that's non-voting for now? And this is the reason why we got lost down a rabbit hole. I'm not going to go there about shifting sands, but it's this whole idea of how do you understand what the framework is going forward if there is such a fungible quality to grants that have already been guaranteed in exactly what form they will take going forward.
What a moment for that industry. What a moment for this market. What a moment for us. Legendary investor Howard Marks of Oaktree Capital Management releasing a new memo called The Calculus of Value, writing overvaluation can never be proved and there's no reason to think there will be a correction anytime soon. But the stock market has moved from elevated to worrisome. I'm very pleased to say that joining us on this programme, Howard Mark joins us for more. Howard, welcome to the programme, sir. We want to start with a central question that you pose yourself. Why are asset prices so strong in the face of what you view as net negative developments? Howard, can you share your thoughts with us?
I'm glad to be with you this morning. Of course, as the quote you just put on the screen indicates, this is all just feeling and an opinion. None of this is factual, but it does seem that stocks are expensive relative to what I call fundamentals, or you might call reality. And the outstanding reason I think is that there hasn't been a serious market correction in 16 years, so people get out of the habit of thinking about market corrections. The biggest single mistake, I've been thinking a lot, what is the biggest single mistake investors make? And I've concluded that it is that they conclude that the way things are today is the way it'll always be, and the things that have been happening will always continue to happen, whereas reversion to the mean is much more likely. So I just think that it's worked very well. Being an equity investor has worked very well. Doing it on leverage has worked even better. Concentrating in a few stocks has gone very well. Investors are by nature optimistic, and that optimism dies hard. I just think that the fluctuations of the market are mostly related to psychological fluctuations, and people go from neutrality to liking stocks, to liking them a lot, to liking them a ton, to liking them too much. And that's the continuation that creates bubbles. And, we're probably in the early days of that.
When you talk about liking, Howard, maybe liking these assets a little bit too much, can you put into perspective the last time you saw this type of environment that left you thinking maybe some of the opportunities aren't as great when it comes to buying some of these assets at current valuations? Is there another time that this sort of reminds you of in any capacity?
Well, I guess, Lisa, the last time was probably around 97, when the market was kind of falling in love with tech stocks. And, the market was rocketing along. People were not worried about the level of valuations. People were extremely optimistic about the opportunities for the internet. Alan Greenspan famously cautioned that there might be irrational exuberance. Now I picked 97 because even though Greenspan was concerned about exuberance, the market went on to rise for another 2.5 to 3 years. Remember I said we're in the early days. We're not at a critical, at a nutty valuation. I'm certainly not ringing the alarm bells, as the quote that you had on the screen said. No reason to think there'll be a correction soon. But the point is that things are expensive. And they may go on to become more expensive, but the fact that they're expensive it should not be lost.
And Howard, I think a lot of people point to, in terms of the echoes of the late 90s, the tech sector of the market as being the most overvalued. What I thought was so interesting about your memo is that that wasn't your take, that wasn't your bigger concern in the market at a time when people are counting on a certain robustness of growth and a certain kind of inflationary backdrop. Why is it that tech isn't the focus of your concern this time around?
Tech contributes to the aura that surrounds the markets. And a lot of people have been citing the fact that the so-called Magnificent Seven, stocks like Amazon and Alphabet, have been contributing disproportionately to the rise. And they're responsible for more than 7 stocks. Their dollar gains have been responsible for more than half of all the gains in the 500 stocks in the S&P, 7 out of 500. But they're great companies. They're at high valuations. I think that I can't say those valuations are excessive. But the other 493 stocks are quite highly valued, not as highly as the Magnificent Seven, but nobody says they're the same quality company, quite highly valued relative to history. And it is the fact that high valuations are being applied to more average companies that I think's more alarming than the fact that exceptional valuations are being applied to exceptional companies.
Howard, there's a quote you use in this memo. I enjoyed this quote. You said, "He who knows only his side, his own side of the case, knows little of that." And then I worked through the rest of the memo, and there was a conclusion there about credit. And I just wonder, sir, whether your focus on equities in this note offers you a greater perspective on how much value is offered in credit right now.
Well, you know, it's as John Stuart Mill said, in I believe it was 1859. You have to know all the sides of the story to understand whether your side holds water. And I cite the bull case there for why the market isn't overvalued. I think that's part of the job. But as you say, you know, my conclusion is that I'm not, as I said before, I'm not raising an alarm bell, but I do think it's time for some caution. And you know, this is a little bit of what we call on Wall Street talking your own book. But you know what I do, what Oaktree does is mostly something called credit, buying the debts of companies, and debt is inherently more defensive than equities. And you have a promise of payment. You know what your return will be if they pay interest and principal as promised, and most of the time they do. So I just think that this is a time to put a little more defense into your portfolio, and investing in credit as opposed to equities is one way to do it.
Is it still defensive, Howard, if you're looking at credit spreads that are the tightest since 1998? I'm looking at investment-grade credit spreads, which are thought to be a more defensive part of the credit market. I mean, does that sort of question what it means for it to be defensive when the valuations are high there as well?
Well, first of all, Lisa, debt or fixed income or bonds or what I call credit, all different words for the same thing, is different in nature from equities because you do have a promised contractual rate of return. And you can say that the promised contractual return isn't as high as it has been historically, or the increment that it provides over treasuries to compensate for the credit risk isn't as high as it has been historically. But you can't say that they don't promise 7.5%. And a promise of 7.5%, you're going to pay some fees. You're once in a while going to encounter a credit loss. I think it's highly likely to provide, let's say, a return in the 6s over the next 10 years. A contractual guarantee approaching something in the 6s over the next 10 years is, I think, more defensive than being in the stock market at these elevated valuations. That's the point. You know, you just said tighter than they have been since '98. If you looked at where they were in '98, and you hypothesized to put an investment in a portfolio of high yield bonds in '98, how did you do over the last 27 years? And I think you did fine. That's my point. It has a high probability of doing fine, whereas stocks, if the valuations are elevated, have some reasonable probability of doing less than fine.
Is the United States still the focal point for defensive investments?
I think I said in the memo that I think the U.S.
개장 브리핑
is still
시작하도록
the best place
하겠습니다.
in the world.
개장 브리핑
The
시작하도록
things that
하겠습니다.
make the U.S. exceptional, the spirit of innovation, the free markets, the rule of law, the capital markets, the growth and dynamism, the great companies. These things are still.
것이 경제의 가장 큰 변수로 떠오른 정책 이슈부터 살펴보죠. 트럼프 행정부의 움직임이 정말 파격적입니다.
네, 먼저 관세 이야기부터 시작하겠습니다. 트럼프 대통령이 기존 철강 및 알루미늄 관세 부과 대상을 400개 이상의 소비자의 품목으로 대폭 확대했습니다. 여기에는 오토바이, 아기용품, 식기류까지 포함됐습니다. 더 주목할 점은 이미 미국으로 운송 중인 상품에도 예외 없이 적용된다는 겁니다.
이미 배에 실려오는 물건까지 관세를 물리겠다는 건데 관련 기업들의 혼란이 상당하겠군요. 그런데 이 관세 확대가 투자자들에게 왜 중요한 겁니까?
핵심은 인플레이션 압력과 그에 따른 연방준비제도, 즉 연준의 통화정책 경로입니다. 관세는 곧 수입품 가격 상승으로 이어지고 이는 소비자 물가를 자극하는 요인이 됩니다. JP모건 프라이빗 뱅크 같은 기관에서는 이미 연준의 금리 인하가 매우 점진적인 경로를 밟을 것이라는 전망을 내놓고 있습니다. 이런 상황에서 관세발 인플레이션 압력이 더해지면은 연준이 섣불리 금리를 내리기 더욱 어려워지는 거죠.
결국 시장이 기대하는 금리 인하 시점이나 폭이 달라질 수 있다는 거군요. 이번 주 후반에 있을 잭슨홀 미팅에 더 관심이 쏠리겠습니다.
맞습니다. 제롬 파월 연준 의장이 이 관세 문제를 어떻게 평가하고 향후 통화 정책에 어떤 영향을 미칠지에 대해 어떤 힌트를 줄지가 초미의 관심사입니다. 하지만 관세보다 더 시장을 놀라게 한 소식이 있었습니다. 바로 정부의 직접적인 시장 개입입니다.
정부의 시장 개입이라면 구체적으로 어떤 내용인가요?
백악관이 반도체법, 이른바 칩스 액트 보조금을 받는 기업의 지분을 정부가 직접 인수하는 방안을 검토하고 있다는 로이터 통신 보도가 나왔습니다. 인텔을 시작으로 마이크론, TSMC, 심지어 삼성까지 거론되고 있습니다. 정부가 자금을 지원하는 대가로 아예 대주주가 되겠다는 구상입니다.
정부가 민간 기업의 대주주가 된다는 건데 이건 자유시장 경제의 기본 원칙과도 배치되는 것처럼 들립니다. 시장은 어떻게 반응하고 있습니까?
월가에서는 전례 없는 일이라며 당혹스러워하는 분위기입니다. 국가 안보와 핵심 산업 육성이라는 명분이 있지만 사실상 미국판 국가 자본주의로 가는 것 아니냐라는 비판도 나옵니다. 투자자 입장에서는 기업의 실적이나 기술력 같은 펀더멘털 외에 정부의 정책 방향이라는 거대한 변수가 생긴 셈입니다. 이 정책이 정말 미국 반도체 산업의 경쟁력을 높일지 아니면 시장을 왜곡하고 비효율을 낳을지는 앞으로 계속 지켜봐야 할 중대한 문제입니다.
이런 거시적 불확실성 때문인지 시장의 분위기도 다소 위축되는 모습이었습니다. 특히 잘 나가던 기술주에 대한 불안감이 커지는 것 같네요.
네, 옵션 시장에서 특이한 움직임이 포착됐습니다. 기술주 중심의 나스닥 100 지수가 급락할 경우에 대비하는 이른바 재앙 풋옵션 거래가 눈에 띄게 늘었습니다. 이는 일부 투자자들이 최근 빅테크의 가파른 상승세가 과도하다고 보고 큰 폭의 조정을 염두에 둔 방어적 포지션을 취하고 있다는 신호입니다.
AAA에 대한 폭발적인 기대감이 조금씩 식고 있다는 뜻으로 해석해도 될까요?
기대감이 식었다기보다는 옥석 가리기가 시작됐다라고 보는 편이 더 정확합니다. 소프트웨어나 서비스 분야에서 AA를 어떻게 수익으로 연결할지에 대해서는 아직 물음표가 많습니다. 하지만 AA를 구현하기 위한 기반 시설, 즉 인프라에 대한 투자는 상상을 초월하는 규모로 계속되고 있습니다. 대표적인 예로 데이터 센터 기업인 벤티지 데이터 센터스가 텍사스에 무려 250억 달러, 우리 돈으로 약 34조 원 규모의 초대형 AA 캠퍼스를 짓겠다라고 발표했습니다. AA 랠리가 끝났다기보다는 실제 돈이 되는 하드웨어와 인프라 분야로 자금이 집중되고 있는 현상으로 볼 수 있습니다.
이제 개별 기업들의 실적 발표 내용을 살펴보겠습니다. 어제는 특히 소비, 헬스케어, 전기차 관련 주요 기업들의 성적표가 공개됐군요.
네, 먼저 미국 소비 경기의 바로미터로 불리는 주택용품 유통업체 홈디포입니다. 2분기 매출이 452억 8천만 달러로 시장 예상치를 소폭 밑돌았습니다. 주당 순이익, 즉 EPS도 4.68달러로 예상치였던 4.67달러에 약간 못 미쳤습니다. 이는 고금리와 물가 부담에 소비자들이 대규모 주택 개조 같은 큰 지출을 줄이고 있다는 신호로 해석됩니다. 미국 경제의 70%를 차지하는 소비가 둔화될 수 있다는 중요한 지표입니다.
소비 관련주는 부진했는데 헬스케어 쪽은 분위기가 좀 달랐던 것 같습니다. 메드트로닉 실적이 좋았죠?
맞습니다. 세계적인 의료기기 기업 메드트로닉은 시장의 예상을 뛰어넘는 호실적을 발표했습니다. 1분기 매출은 85억 8천만 달러, EPS는 1.26달러로 모두 예상치를 상회했고 연간 이익 전망치도 상향 조정했습니다. 여기서 더 주목할 점은 행동주의 펀드로 유명한 엘리엇 매니지먼트가 이 회사의 주요 주주로 등장했다는 사실입니다. 엘리엇의 입김으로 새로운 이사진이 합류하고 기업 가치를 높이기 위한 위원회가 구성되는 등 적극적인 경영 변화가 예고됐습니다. 실적 개선과 주주 행동주의 기대감이 맞물린 상황입니다.
중국 전기차 기업 샤오펑의 실적도 나왔군요.
샤오펑은 2분기 매출 182억 7천만 위안을 기록했는데 더 중요한 것은 3분기 가이던스입니다. 3분기 매출이 작년 같은 기간보다 2배로 급증할 것이라는 매우 강력한 전망을 내놨습니다. 중국 정부의 소비 촉진 정책과 신차에 대한 강한 수요 덕분입니다. 극심한 가격 경쟁이 벌어지는 중국 전기차 시장에서 나름의 입지를 다지고 있다는 긍정적인 신호로 볼 수 있습니다.
그 외에 다른 기업들 실적도 간단히 짚어주시죠.
네, 전자계측 장비 기업인 키사이트 테크놀로지스는 예상을 웃도는 3분기 실적과 함께 연간 전망을 상향하며 견조한 모습을 보였습니다. 크루즈 여행사인 바이킹 홀딩스도 EPS와 매출 모두 예상치에 부합하는 양호한 실적을 발표했습니다. 반면 안과 전문기업 알코는 EPS는 예상을 넘었지만 매출이 기대에 못 미치며 혼조세를 보였습니다.
이렇게 다양한 실적들이 나왔는데 청취자 여러분께서는 어떤 기업의 실적이 가장 인상 깊으셨나요? 소비 둔화를 보여준 홈디포일까요? 아니면 행동주의 펀드의 개입이 시작된 메드트로닉일까요?
오늘 시장의 핵심 포인트를 정리해 주시죠.
오늘의 핵심은 한마디로 정부의 귀환입니다. 트럼프 행정부가 관세와 직접적인 지분 투자라는 강력한 정책 도구를 들고 시장에 깊숙이 개입하기 시작했습니다. 이는 개별 기업의 펀더멘털을 넘어서는 거대한 변수로 투자자들은 이제 워싱턴의 정책 방향을 그 어느 때보다 예의주시해야 합니다. 단기적으로는 불확실성이지만 장기적으로는 미국 중심의 공급망 재편이 가속화될 수 있다는 점을 시사합니다.
그렇다면은 앞으로 우리가 주목해야 할 관전 포인트는 무엇일까요? 단기적으로는 이번 주 후반에 열리는 잭슨홀 미팅입니다. 제롬 파월 연준 의장이 관세발 인플레이션 압력에 대해 어떤 입장을 내놓을지가 최대 관심사입니다. 여기서 금리 인해 대한 시장의 기대감이 꺾인다면 증시가 한 번 더 출렁일 수 있습니다. 또한 정부의 반도체 기업 지분 투자 계획이 어떻게 구체화되는지도 계속 추적해야 할 중요한 변수입니다.
오늘도 유익한 분석 감사합니다. 내일 아침에 새로운 소식으로 다시 찾아뵙겠습니다.
네.
자, 금일 개장 브리핑 여기서 마무리하도록 하겠습니다. 개장 브리핑은 여기서 마무리하고 금일 주요 일정 한번 살펴보도록 하겠습니다. 자, 2025년 8월 20일 수요일 금일 주요 일정으로는 자, 11시 30분 EIA 원유 재고 발표 예정이 있고요. 그리고 2시 미국 20년물 국채 경매 예정이 있습니다. 그리고 3시에 중요한 FOMC 의사록 발표가 있습니다. 자, 연설로는 연준의 월러 이사 그리고 보스틱 총재 등의 연설이 예정되어 있습니다. 확인되는 백악관 일정은 금일 5시 장 마감에 맞춰서 미국 트럼프 대통령의 EU 대사 임명식 참석이 있습니다. 자, 그리고 연중 관련해서 트럼프 대통령이 이제 소셜 미디어에 남긴 코멘트가 하나 있어서 이거 말씀드리고 방송을 종료하도록 하겠습니다. 자, 연중 관련해서 쿡 이사 사임 하라라고 밝힌 부분이 있습니다. 그 유가 관련해 가지고 우크라이나 평화협상 차기 단계 주식 속 강세를 보여주고 있고요. 유가는 API 원재고가 예상과 달리 242만 배럴 감소한 것으로 나타나면서 상승한 것으로 확인이 되고 있습니다. 자, 그리고 세계 중앙은행 총재들이 트럼프를 비판하면서 파월을 지지하고 있다는 기사도 확인이 되고 있고요. 그리고 무역 불확실성에 여전히 성장이 더딜 것이라는 블룸버그발 뉴스도 확인이 되고 있습니다. 자, 그 트럼프 측에서 이제 연준 쿡 이사 관련해가지고 모기지 관련 수사 요청을 한 게 확인이 되고 있고요. 자, 미 연방주택금융처 FHFA 청장 빌 폴테가 연준 쿡 이사를 주택담보대출 사기 혐의로 조사해달라고 법무부에 공식 요청한 사실이 확인되고 있습니다. 자, 이외에는 별도의 기업 뉴스 확인되는 게 있고요. 따로 시장에 영향을 줄 만한 기사는 확인되지 않습니다. 자, 금일 방송은 여기서 마무리하도록 하겠습니다.
Change their pricing off the back of that.
It seems like right now markets are coalescing around the idea that this isn't an incredibly strong economy in the United States. It's not an incredibly weak one either, but it's one that could warrant rate cuts in the near future. I'm just wondering how much you think that people are overlooking the weakness side of things that might drag down some of the valuations just on basic economic principles.
I think it still does appear in economic forecasts. I mean, when we do our downside scenarios, we're still allocating a 30% probability to a recession. So it's, it is not, I think, completely ignored. But certainly if you're looking at the roll call of economic data, as you said, there is a cooling economy going on, but we're not seeing really clear signs that there is a meaningful slowdown. We are getting to the point where over the next 2 months, the economic data should give us a much clearer picture of the impact of tariffs. But, there's so much more to be said in terms of watching how the consumer is performing even before they start to maybe potentially feel the impact of higher prices. So we are at that bit of a cusp where it makes sense, certainly from my perspective, that maybe the Fed should start cutting rates. It's a question of how much they're going to cut rates and how much of the data dependence is starting to flow out of the Fed and maybe a little bit more politics coming in.
Seema, appreciate your time. Seema Shah there of Principal Asset Management. Got to take a beat. The calendar's shaping up. You know what it looks like. Jackson Hole Friday. Payrolls first week of September. CPI after that a week later. A week later, the Federal Reserve meets. Data could change the story all over again, could completely upend this whole conversation just like that. One payrolls report.
You know, I'm just thinking about the conversation that we had earlier this morning about the seasonality and how we've seen this movie before, that the first half is relatively weak and the second half is relatively strong. And that's my question. How much do we get head fakes here, given the fact that there are a number of influences, in particular the One Big Beautiful Bill, that kick in later this year?
Jackson Hole just got a little bit more interesting for you and the team.
Look, I'm fascinated to go there. I want to see what they think about this labor market, how they're measuring it. I want to know, and I'm very excited to go hiking.
Travel safely, Bramo.
Thank you.
And enjoy the hike too. Looking forward to your coverage alongside TK. Coming up tomorrow, John Stolfus of Oppenheimer, the former Fed Governor Betsy Du, Tom Tsouras of Strategas, and Megan Robson of BNP Paribas. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The new one?
Yeah.
30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, retail results ramp up. Target gets a new CEO while Lowe's makes a big deal. Tech troubles. The NASDAQ struggles to recover from its second biggest one-day drop since April's tariff shock, and suspense builds for Powell's Jackson Hole speech as the Fed chair faces challenges on multiple fronts, not the least of which is the president calling for the resignation of yet another Fed governor.
Yeah, we'll dig into the drama there. Let's talk about Hertz, though. Absolutely soaring this morning on a report that the car rental company will start selling pre-owned cars cars on Amazon Autos, not a platform that I knew existed, but maybe you did, Matt Miller.
You know what? I haven't thought about that a lot lately, but I did know that Hertz wants to make a bigger deal out of selling cars, not just renting them. There are a ton of retail earnings this morning. Target announced a CEO change and an outlook that has investors on edge. Lowe's earnings topped estimates and announced it will buy foundation building materials for $8.8 billion in cash. And finally, TJ Maxx boosted its earnings outlook as discounts lure shoppers, which is, I mean, that's their whole model, right?
To lure shoppers.
With discounts.
You're right.
That's why you go to TJ Maxx.
That's that you're correct in that. Let's dig into this morning's retail earnings. We're joined now by Bloomberg retail reporter Lily Meyer. And I actually want to start with the stock that was in the middle there, Lowe's. Really interesting to see them come out with earnings. Also rising, though, even after they announced that they're going to buy foundation building for $8.8 billion in cash. Usually you see the acquirer fall in such a situation. Not today, though.
Yeah, not today. And Lowe's is really leaning into its pro market. So it's making acquisitions to cater to more of contractors and more of the professionals who shop there rather than the DIY shoppers.
So Target is putting a new CEO in place on, I think, really the perfect day, because Matthew Boyle has a story on the Bloomberg about the costs of replacing a CEO. It's an amazing story, and it can be a tremendous cost. Why are they replacing the CEO?
Yeah, so Target has struggled for a while. It has struggled to compete with Walmart. It's struggled to have that kind of fun factor that brings customers in. And so it's not super surprising that it's replacing its CEO, but I think the street fell because maybe they were hoping for an outsider to run the business.
I feel like I should ask you about TJ Maxx, but I actually want to go back to Lowe's because you mentioned that buying foundation building, it's all about deepening their relationship with more of the professionals rather than the DIY. That's interesting because it feels like Home Depot has really focused on that.
Yeah, Home Depot has focused on both. So it's also made some acquisitions to get more of that professional customer. And normally they buy more and they shop more often.
I will ask you about TJ Maxx. I mean, obviously, the whole model is luring shoppers with discounts. And I guess it's doing better than the street had expected?
Yeah, so they reported really good earnings, and, you know, it's a really good time for discount retailers. Consumers are feeling concerned about the economy and looking for lower prices, and so TJ Maxx fits perfectly within that.
All right, Lily Meyer covering retail for us. TJ Maxx shares, by the way, I'm looking at the last 5 years, have almost tripled in that time period. So I guess it's been a good time for discounting for a while. Another stock we're watching this morning is Toll Brothers, the luxury home builder, sinking as weak demand weighs on quarterly earnings. Bloomberg's equities reporter Nora Melinda, who also covers the housing sector for us, joins us on set. So what's the story, Nora, with Toll Brothers?
It's still a weak situation here right now. Of course, we're seeing weakening demand that we're really discussing here, but the story here is really uncertainty. Of course, when you reflect on last quarter here for Toll Brothers, we're talking about a trade war that's really what has been front and center for a lot of people. When you look at the unemployment data, of course, that seems to be cooling a bit as well as we think about what the job market is looking like right now. So you have a lot of people who are really trying to grapple with, is now the time to buy a home? Is now the time to buy a luxury home? But it is important to point out the fact that we do still have a lot of those people who are well off and they're able to still pay down a lot of these houses from Toll Brothers in an all-cash transaction. So they're not necessarily having to take out a mortgage loan here. But when you look back at the last quarter, we saw mortgage rates that were sitting at about 7%. So pretty hefty deal there, and you're seeing that reflected in the trade today.
Well, it's similar to the conversation we were having around Home Depot yesterday. Sort of the takeaway from that was that, okay, the housing market is kind of stuck right now, and you're seeing that reflected in some of those DIYers that shop at Home Depot. So Toll Brothers, you think about the personality of these different home builders. My understanding is that Toll Brothers, it's more move-up buyers. Maybe they're not first-time home buyers. Maybe they're selling their previous home. What does that say about the rest of the home building landscape?
Most definitely. So Toll Brothers does focus more on affluent buyers, but to your point, they also do have move-up buyers that are looking to get a second home. And in some situations, this is a discretionary situation. So maybe they don't need this home at the current moment. So some people are kind of putting that off for the time being and waiting until rates drop, until we see the Fed potentially cut later this year or into the next year, 2026, to really make a big purchase such as this. But I mean, you do still see people out there that are using cash you know, they're liquidating their portfolios and getting out there and putting all the money down. But I mean, it really does show just the broader landscape of how challenging things are. I was looking at a stock, James Hardie, and they're essentially a building materials company down for double-digit losses right now, down 28% in pre-market trading because of also them having this dramatic miss. So it really is just underscoring all the complications that we have right now in this stock market.
It is brutal.
It is
out there.
stuck. Is
Yeah.
that an Olivia Rodriguez call out?
No, it wasn't. It was just me talking about my experience trying to buy a home.
Hey, you could have gone with it.
Yeah, that's true.
I like
would have
it.
believed.
I
Not
like
a
it.
huge Rodrigo fan.
Rodrigo, there you go. Norm, Melinda, thank you very much. Excellent to have somebody from the equities desk who also watches housing. Housing is stuck. We've been talking about that on this program for a while now. The NASDAQ 100 is also kind of stuck right now, struggling to recover from a sell-off yesterday led by NVIDIA. Let's talk about that as well as Intel's recent surge with Bloomberg Tech's Caroline Hyde. Caroline, what happened to NVIDIA yesterday? We started to see it sag in the early minutes of trading, and by the time we closed off the show, it was down more than 2%.
And you saw AMD off by 5%. You saw Palantir off by almost 10%. We are starting to question the valuations for a moment. Whether or not that's the macro policy, we all await what's happening with Jay Powell, whether or not we start to question valuations in the private market and that seeps into the public market, or more broadly, you're just thinking like slightly lower volumes mean we're going to have these bouts of volatility. But at the moment, we are starting to see some of the bigger tech names that have run up in the last few months just get some profit taking happening overall, particularly in the chips names. And it was interesting that, of course, while Intel has been outperforming, the rest of the market has just been perhaps putting back. We've got NVIDIA's numbers coming next week. Maybe there's a little bit of anticipation going on there too.
Yeah, absolutely. Have to imagine that'll be a catalyst. It'll be interesting to see whether or not yesterday was a one-day rotation, but you did see big tech fall. You saw bonds rally, so maybe some profit taking going on in the sector. Let's talk about Intel a little bit more.
Yeah.
We've been talking about it for several weeks now. Matt has been making fun of the fact that, you know, it's just cracked $100 billion in market cap, which isn't very big in the grand scheme
Versus
of the
your
tech
$4
sector.
trillion on
Exactly.
Not as big as Palo
Exactly.
Alto, for example.
But you take a look at the valuation of Intel. It's trading, what, at 50 times projected profits? That is the highest since early 2002, Caroline.
Since the dot-com era?
Yeah.
I will just say Palantir's trading at 200 times.
Well, that is just
future
silly,
earnings. So we've all got
100
the
times
perspective
sales.
there. But look, Intel hasn't been this richly valued since the dot-com era. It is a really nice piece of work that Ryan Vestellik has been writing about the fact that we've got $24 billion added in the last month alone to the valuation. We're up 28% there or thereabouts. We might pull back a little bit today, but this is a lot of hope being baked into what's going to happen. And you've got kind of a dichotomy of ideas here. On the one side, the optimists, the idea that maybe you get a 10% holding come from the government, maybe you get SoftBank coming in and buying $2 billion stake. Maybe this galvanizes people to believe in Intel's future, and then they start ordering chips from them and then going forward. But on the flip side, you've got others saying, is the government holding a stake in a company always that positive for a fiduciary duty perspective and for profit holders more and shareholders more broadly? And will this actually bring demand? Because ultimately that's where people have been questioning the innovations happening at Intel and whether you want to be buying and making your chips with Intel versus TSMC. But for now, we've seen a phenomenal run up, 53 times future earnings, and we'll see as to whether people really want to be buying into the stock at the moment. Some are now questioning. Most analysts have said sell the stock, and indeed, most of them have a price target that is below the current level.
Well, you bring up what I think is a key question, whether or not the government as a fiduciary, whether or not you want to invest in that company. We were talking about my ETF idea, where you just buy up those sort of companies, might not actually be the trade.
Well, there are a lot of models for it around the world, right? If you look at the Kreditanstalt für Wiederaufbau in Germany.
Beautiful. Did you know this? Anyone know this guy who still lives in Germany?
You know, a lot of countries have these investment funds that are for lifting industries that they think are relevant to national security. And
what, like China as well?
For example, and by the way, I was talking with or emailing with Winston Ma from the China Investment Corporation. He's also an adjunct professor at NYU, and he says this is the start of Trump's sovereign wealth fund that he talked about so much. Joe Kaiser over at Mercado said this is the Trump administration's own VC effort. Are you hearing people say stuff like that?
I think people are wanting to see whether the government is going to be all in on defence tech, as we started to see a lot of people calling to invest in European defence names because we've got a similar vibe going on there. I think the questioning is, though, also why is money also being incentivised from the Middle East? Initially, we've seen, well, SoftBank come in, but Middle East money was what was thought perhaps would be used to prop up an Intel or the like. But the fact that really it's the US government that wants to back US winners when it comes to generative AI, when it comes to the military applications, I think that is something that we're starting to hear far more, that government's playing a way more active role in corporate governance and corporate business than we ever anticipated. Although remember, Howard Lutnick yesterday did say, we don't want to make any decisions at this company. We just want a stake in the equity.
True, true. But it does seem like that's the direction of travel. Caroline, great context as always. That is Caroline Hyde. She is the co-host of VTech. You can catch her at 11 a.m. Eastern. But let's take a quick check on futures right now. We're 20 minutes out from that opening bell, and you can see, boy, it's quiet once again. That seems to be the theme of this August week. The S&P 500 down about 0.1% pre-market. The NASDAQ 100 still nursing losses in the pre-market. We know that yesterday was a wipeout, though, for those tech names.
Yeah, you know, you've been saying wait and see a lot this week.
I
and
have.
Obviously, traders tend to do that, especially on, for example, on Fed Day. You'll see them turn off the algos, sit on their hands until they parse through the statement. This is like Fed week, right? Because we had Jackson Hole on Friday. And WIRP, the World Interest Rate Probability function on the Bloomberg, is still showing an almost 85% chance of a rate cut in September. The question is, after that PPI inflation data, does the market really buy into it? Are we really going to get that, or could we be caught wrong-footed after this?
Right, and I mean, does Chairman Jerome Powell want to rock the boat? It seems like the consensus is that maybe he won't say too much about monetary policy, but it is his last Jackson Hole symposium as Fed chair, so who knows?
Yeah. All right, we're going to talk about cars when we come back.
Of course.
And we have actually a few car segments here, so get excited. Hertz reportedly partnering with Amazon to sell used cars. More on that next. This is Bloomberg Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. Estee Lauder is expecting sales to increase this year. It's an early sign that its turnaround plan is starting to work. The owner of La Mer and Clinique is trying to sell more products on Amazon and TikTok as it pivots away from its reliance on department stores. And Lazy Boy shares are tumbling in pre-market trading after posting weaker than expected earnings and issuing a downbeat outlook. The recliner company citing slower foot traffic and weaker sales at its Joybird brand. Thoma Bravo is in advanced talks to buy the HR software provider Dayforce. We were talking about this yesterday. It would be one of Thoma Bravo's largest ever deals. The private equity firm is discussing an offer of $70 a share for the Minneapolis-based Dayforce. That would represent about a 32% premium for the company. And guess, the iconic jeans brand of the 1980s will be taken private by Authentic Brands for $16.75 a share. That's about a 73% premium for the apparel company. Authentic's portfolio includes Champion, Reebok, Eddie Bauer, and Brooks Brothers. It's a true flashback portfolio.
A diversified portfolio, too. Let's talk about Hertz, though. I know that you're eager to get to this story, Matt. Shares in Hertz rising in a big way after a report that the car rental company is partnering with Amazon Autos to start selling secondhand cars online. You can see that Amazon shares not reacting much. Hertz up 12% pre-market, and Carvana also dropping. Let's unpack it all with Bloomberg's Detroit bureau chief David Welch. So this is interesting from Hertz because, again, I called them a car rental company, but in this pact, they would be selling the vehicles, David.
Yeah, look, they've been selling vehicles for a long time and really pushed the retail side of it the past 6 months, especially. They've got Tom Brady as a pitchman. They're doing more with their own division that sells cars online. And by partnering with Amazon, just driving more eyeballs to the inventory that they've got out there, getting more people to give them a look and trying to boost sales even more. And the reason they do this, rental car companies, they can go to auction and sell used cars, but they get pretty poor pricing by doing that. If they go retail, they get much better pricing. And the more channels you got, the more cars you can move at a better price.
Amazon, though, you know, this is a place where I buy like Chinese knockoff goods for $25, not whole cars. How would that work?
Basically, Amazon, people go on there, they'll serve inventory on cars. A lot of franchise dealers already do this. So you find the car and you work out a deal to buy it from the dealer typically. So in Hertz's case, Amazon doesn't buy the inventory, they basically list it for them. So you know, it's basically, I wouldn't call it lead generation, but it's getting inventory in front of people who are shopping for cars. Amazon hasn't been huge in this. They're starting to push more into it as well. Other websites, I think, have been a lot better at doing it. But I think for Hertz, it's a smart move because they're just finding ways to find more retail buyers to look at their inventory.
I see. So it's like, I mean, Car Gurus, Cars.com, Auto Trader, where you click through to Hertz or you click through to your local dealer. It's not as if Amazon handles delivery and the guarantees and whatnot. So it really is kind of a lead generator.
Kind of is. And look, Hertz is starting with this in 4 cities. Eventually they want to get to the 45 or 48 locations they've got where they're selling cars at retail. And look, there's a lot of competition out there for retail sales, obviously, online. Obviously, there's Carvana doing this, the sites that you mentioned. You know, Lithia Auto, the big dealer, they're very good at retail sales online as well. And it's a very big, very diversified market of selling used vehicles online and you know, the used car market in general. But if you look at Hertz shares this morning, pre-market, we'll see what happens at the open. There's a pretty heavy short interest in Hertz, so a little bit of news goes a long way in terms of pushing the price up. But you know, this is part of Hertz really pushing this agenda of getting better pricing for the cars that they've been renting when they go to sell them. And I think we'll probably see more deals like this from them in the future.
All right, David, really appreciate your time. That is Bloomberg's Detroit bureau chief, David Welch. Really interesting story when it comes to Hertz. David, of course, mentioned that short interest. We know that shares have really staged quite a rally year to date, up 42%. But you take a look over the past 5 years, as we often do here on Open Interest, they're down still about 80%. So it's been a good year, but coming after several pretty bad ones.
Well, someone famous took a big stake.
Yeah, I heard that.
All right, we'll continue to talk about this company, and then later on, we're going to talk about Ford, the Ford Motor Company as well, because they may come out with super high-end, like $300,000, possibly limited supercar for off-road, like a GTD in the dirt. I'm pumped about that.
I know you're pumped about that, but even before we talk about Ford, we're going to speak with Robinhood's Stephanie Guild. She remains confident in her year-end call for the S&P 500 at 6,500. We'll discuss how she's factoring in tariffs and AI in the labor market. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
Mega cap tech stocks are the most under-owned in more than 16 years relative to their weighting in the S&P 500. That is according to Morgan Stanley. And specifically, NVIDIA was the most under-owned large-cap tech stock among institutional investors at the end of the second quarter, according to that report. Let's get into it with Robinhood Chief Investment Officer Stephanie Guild. She joins us at the desk. First things first, it's great to see you.
Likewise. Happy summer.
Happy summer to you. It's almost over, sadly. Let's talk a little bit about positioning here, because we have the institutional snapshot. Apparently, they're underweight NVIDIA. What are the retail traders on Robinhood's platform doing?
They are still doing the thing that they do, which is tend to trim their winners and go into things that go down. So, for example, over the last week, CoreWeave was on the buy side, and AMD, for example, like in the chip space, was on the sell side. I have seen an uptick a little bit. So ETFs tend to be used more so when there's a big dip in the market, which we obviously haven't had. Maybe yesterday you could call one. But I did see an uptick in that, and it's actually been more in places like ETFs that tend to use options. That, you know, to generate income,
right?
Which is a different take.
So when you see a dip, and I mean, yesterday wasn't extreme, right? We had
1 point something on the NASDAQ 100.
True, 0.6% on the S&P 500.
Yeah.
Do you see them buying the dip with those ETFs?
It wasn't, not so much yet. I think you've tended to see it more on the single stock basis. And so I think also our customers are like used to volatility. They don't buy the things that are like slow and steady. You don't see a big buy in consumer staple names. Like it's a much more, Mag 7 tends to be like in our Robinhood Investor Index, the Mag 7's around 45%, although that's been falling a little bit. And then you see it in some of the smaller names, like I mentioned, CoreWeave, right? BMNR was on the buy list as well, which, you know, we've seen some other portfolio managers start to invest in.
Interesting. So you say that, you know, the investors on your platform, they're used to volatility. It seems like listening to some of the names you mentioned that you could make the argument that they're actually seeking out volatility too. Yeah, I think you see that. I mean, and certainly on the option side, like you need volatility to kind of make money, right? And have fun. Yeah, sure. I mean, but I do think, like, especially, you know, we do have a customer base that has been investing in crypto for a long time. Right. That does not lack volatility.
BMNR is
Bitmine immersion.
Bitmine immersion technology. Yeah. I'm looking at the chart.
Yes.
It's pretty fascinating. I can't believe it's a $9 billion market cap.
I know. Well, and you've seen the likes of like Tom Lee and Kathy Wood make investments there. So it's, you know, it's certainly something for the longer term future.
All right, Stephanie, you're going to stay with us. We're going to broaden this discussion out beyond Bitcoin immersion technology, Bitmine, sorry. A check on futures ahead of the opening bell after the drop that we had yesterday.
It's quiet. There it is.
They're down. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter. But it's bad for the product. It's not good. After that, I'm never doing that again.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We are moments away from the start of trading on this Wednesday. This is Bloomberg Open Interest. I'm Matt Miller. We're seeing another dull day in futures where S&P futures are down. There are red arrows really across the board, but there's just not a lot of movement here. 1/10, 0.2%. You hear the opening bell, and we've got a publicly traded company on the New York Stock Exchange again. This is Big Bear AI. They went public via SPAC in 2021 and have lost 44% of their value since then. Down on the NASDAQ, you've got Chimera, which is, I guess, a biotech company that has done okay this year, up about 5% over the last 5 years. They've more than doubled. So a much happier investor base for sure. In terms of the stocks to watch, we're really focused today on retail earnings.
Absolutely, and there's a lot to talk about here. We have Target announcing a CEO change and an outlook. You add it all together, investors clearly on edge. The stock getting decimated at the opening bell, down about 10%. Lowe's, a different story and an interesting one. Its earnings topped estimates, and the company also announced that it will buy foundation building materials for $8.8 billion in cash. Shares up about 4% or so. They're really focusing on the professionals here rather than the DIY set, and shareholders seem to like it. TJ Maxx, really interesting. They boosted their earnings outlook as discounts lure shoppers. Matt, you pointed out that that's the whole thing. That's the whole business model. What's really interesting is that you take a look over the past 5 years for this company, absolutely crushing it, up over 170% on a total return basis.
Yeah, TJ Maxx actually beating out every other big clothing retailer I could put up against it.
And the S&P 500.
Yeah, doing very well. So I don't know who I would cross shop really with TJ Maxx. We were talking about Loehmann's. I'm not sure if that exists anymore. Yeah. Kohl's is a big loser compared to TJX, as is Nordstrom. So
everything is.
Very interesting moves there. Hertz is surging today on news that the car rental company will start selling pre-owned cars on Amazon Autos. You can see another 12% gain here. Earlier this year in April, Bill Ackman took a 20% stake. Our friend Tom Wagner owns and runs this company, Knighthead Capital. So it's a really interesting story because Hertz had done so badly after buying like 100,000 Teslas. Turned out to be a horrible strategy move. But they're trying to move past that now. They've sold a lot of that inventory. They're building up new inventory, and they are making a big deal about the fact that they don't just rent cars, they also sell them.
And specifically, they're going to start selling them on Amazon Autos, which is interesting. Again, I didn't know that existed, but apparently Costco has a similar model as well. So learning a lot this morning. Yeah, about cars. We'll continue that a little bit later with Ford, the Ford Motor Company. I interviewed Jim Farley over the weekend, and it was fascinating. But right now, we're going to get back to these markets. Robinhood Chief Investment Officer Stephanie Guild is with us. And it does feel like, Stephanie, everybody's kind of sitting on his or her hands waiting for Jerome Powell to speak at Jackson Hole. How pivotal or how important is this speech? Could this speech be?
His speeches are always important, but I feel like so much is already built into expectations of Fed rate cuts. And
we all expect a cut in September, right? No matter what inflation numbers come out.
I mean, the market's 85%. I guess it was a little higher like last week, but yeah, we're all expecting that. And obviously some things this morning makes it seem like it's even more possible to happen and for the whole Fed, all the Fed governors to slowly become dovish. So I don't know how much more he can say. Like, I think given those expectations, there could be a chance that he says we still care about inflation and the labor market isn't weak enough for us to care so much about that.
It's interesting. You think about that 85% pricing that's in for September. Maybe it was closer to 90% a little bit ago. It was really solidified after we got that labor market print for July, really ugly, and also the revisions caught a lot of people by surprise in a bad way. But you write in your notes that inflation should still matter more.
I think for right now, because I think if you look at like I think we got a little spoiled, right? Like, I think everybody always, it's about frame of reference. And we had 600,000 jobs added on average coming out of COVID. And then it got cut in half and cut in half and cut in half. And to have not a lot of jobs being added now kind of makes sense. And I think the revisions were a function of the fact that, like, we weren't really funding data collection in the BLS and probably needed to use more technology and things like that. I mean, they still start with a phone call. So I think, you know, but I am worried about the labor market simply because if it doesn't come out in inflation with higher prices from tariffs, it could just come out with cost cutting. And cost cutting means probably, you know, rethinking the way your labor market works, the way your own employee set works. And the CEO, conference board CEO, confidence measure, I think it's called, said there's actually, we saw a tick up in less hiring, at least. I think it was like 34%, which is like the highest since 2020.
I wonder how the labor market affects retail trading, and you obviously have a great vantage point for that. I mean, if people lose their jobs, do they trade less? Are they sitting at home and trading more? What are you seeing in the data from Robinhood?
Nothing's really changed. I mean, you're definitely seeing continued growth.
Because we still have unemployment at 4%.
Yeah, I mean, right, exactly. Like, it's still a relatively full labor market. And you see data from places like JP Morgan, Chase, and Bank of America where they show you like savings on average, and it's still above the 2019 levels. So the consumers continue to spend. We are seeing an increase in credit, right, and people taking on debt. So that is something to worry about. But we haven't really seen any major issues in terms of our customer base.
Interesting. And we've talked about single names. We talked about CoreWeave. What about at the sector level? I mean, what is the thinking around specific sectors, specific industries, as we talk about these different cross currents when it comes to the labor market, when it comes to trade policy, when it comes to corporate earnings?
Earnings have obviously been resilient, but I do think, like, everyone was saying, oh, Q2 earnings were so amazing, but expectations had come down dramatically. Yeah. And where earnings growth ended up was where earnings growth expectations were prior to Liberation Day. So I often wonder, like, were they really that good, or were they just where they should have been expected to be? From a sector and space perspective, we're preferring GARP names, and we started seeing this rotation in July. Growth at a reasonable price, which means that we're not necessarily owning like the highest momentum names, and we want to make sure we have allocations to things that maybe have been a little bit left behind, either in the tech space. We like aerospace and defense, although that's been a little more wobbly lately, but I still like it longer term. And, you know, GARP, as an example, like J&J, you know, that sort of, I think under the current, like, they still have some stickiness, obviously, with their past, but it's 16 times next 12-month earnings. You know, they have a bunch of stuff coming off patent, but that tends to be something that's like rear view. They're investing a lot in the U.S., which is a good, you know, favorable perception, at least.
With this administration, yeah. That's an interesting one, J&J, because it's been really tepid in terms of performance over the last 5 years, but crushing it this year, up about 25%.
Yeah. I mean, that's why we it just felt like it had all the pieces, and they have enough leverage on their balance sheet to maybe make some acquisitions, which perhaps M&A, we're starting to see it tick up.
Yeah, definitely, and especially when it comes to J&J. They really kicked the year off when it comes to healthcare M&A. Steph, it's great to see you again. Great to get some time with you. That is Robinhood Chief Investment Officer Stephanie Guild. Let's get a check on these markets. We're just about 8 minutes into the trade today, and you can see not really bouncing back from that decline that we saw yesterday. The S&P 500 down about 0.1%, even though you have fairly good breadth right now, more than 300 names in the green, but you have some of the tech names declining. Let's talk about the gainers to start, though. Up at the top, you have TJX. That is your biggest points contributor to the upside right now. We know that earnings certainly impressed investors. That's your biggest gainer. JP Morgan, though, also punching higher, as too is Berkshire Hathaway. This is interesting. We've been talking about the stake that they took in United Health. United Health has had a fantastic month. That's probably going to be eventually good news for Berkshire Hathaway as well. But let's take a look at some of the losers today. NVIDIA is up at the top, and this is the problem. It's down 1%, but it's so big that it's really dragging the index with it. Apple, too, isn't helping, nor are declines in Meta.
You got the whole Mag 7 over there.
Broadcom. I know. It's ugly. out there, Matt. And that's what you're going to see at the sector level as well. Let's take a quick look at that on this down day in the market. Again, breadth looks good right now. You have more green than red. That's typically a good sign. Consumer staples at the top, energy, real estate, these smaller companies, these smaller sectors are doing all the work today. But then take a look at this bar. It goes all the way out over here. The tech sector down 0.7%, bringing down the whole index because it's hard to fight against that influence.
Yeah, absolutely. It looks like all of the stocks in the Mag 7 on the downside this morning, and that's tough. And then we have Target also. We're going to talk about that coming up. Those shares sinking as the company announces a new CEO. We're going to talk about the retailer today, and we're going to talk about the cost of switching out CEOs. It can be incredibly expensive and not necessarily yield amazing gains. This is Bloomberg Open Interest.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Nubank is getting a double upgrade over at Citi. The analyst says that the bank is able to accelerate in key portfolios while maintaining good asset quality. That's all good news for Nubank, up about 3.7%. Next up, JP Morgan is assuming coverage of Albertsons with a buy rating. The firm also started coverage of 24 stocks in the food universe, with the analyst saying that food producers are dealing with slowing growth, while food retailers should benefit from the continued inflationary environment because you have to buy food. And finally, the Gap is getting downgraded over at Citi. The firm expects an earnings beat when it reports next week, but says that the company does not have enough pricing power to offset tariffs. Shares up very marginally today.
All right, so those are some of the upgrades and downgrades we're looking at. Another retail, a name that is guaranteed to get a lot of action today is Target. The company picking COO Michael Fidelka to become its next CEO and turn the company around as Brian Cornell steps away. Shares are plunging on the report. Joining us now is Paul Lejuez, senior analyst at Citi Research. He has a neutral rating on the stock with a $94 price target. And Paul, I just wonder your take on this insider at Target. He's been there since he joined as an intern in 2003. Is he going to be enough to upgrade your rating to a buy?
Well, yeah, he's been there for over 20 years, and I think the market was maybe hoping for an external person to come in and take that role. So obviously, we're seeing some negative share reaction today. I think, most important for us is Target has been losing market share for several years now. And so fundamentally, what we'll be looking for is, can Michael Fidelka do something to change the trajectory of Target sales, which have been by far underperforming that of Walmart and Amazon and Costco, some of the winners of retail.
It can't be a vote of confidence, though, to see the stock down so much today, Paul. Is this more to do with the earnings themselves or the appointment of this new CEO?
Well, it's a little bit of both. I think for sure there was an aspect of the market wanting to see an external person take that seat. But at the same time, same-store sales were still down, and they've been down for several years now, at the same time as we're seeing sales increase at other retailers. And so today's report was a reminder that Target is losing market share. They said the same thing that they said on the first quarter call, that they are losing share in more than half of the categories, the 35 categories that they track. That's a similar comment they made in the first quarter. They said it again today. And I think it just highlights some of the challenges that they're facing.
What's the biggest problem at Target? Is it just not as prevalent, as ubiquitous as Walmart? Do they have a rep for maybe a slightly higher price point? Have they not kept up the look of their stores? What would you put it down to if there was one thing?
Well, it's hard to pinpoint one thing, but I think it's certainly they are losing market share to Walmart. Walmart is winning, and that's been a theme of ours for several years now, and we can't dismiss that, because when you have a retailer as large as Walmart increasing their sales as much as they are, those dollars have to come from somewhere. So I would say if I had to pinpoint, it would be that Walmart is winning, that they're a force in retail, and Target has been on the losing end of that.
We should also talk a little bit about TJX reporting this morning, and you can see that these results are being welcomed in a big way in the stock market. Shares currently up about 5%. When it comes to this specific quarter, if you weren't following this company closely, you could say, okay, maybe they're benefiting from a trade down right now in this current environment. But Paul, this is a story that has been working for a long time, at least when you take a look at how the shares have performed.
For sure. I think, when we look at the off-price sector in general, TJX, Ross Stores, Burlington, that sector has been taking share within retail for several decades. And I think the current environment is very ideal for them. They have mind share for value. Customer clearly is voting by showing up at their stores. Traffic has been very strong at the off-price group, especially TJX, for some time. We think they're a winner in the retail landscape. And this tariff environment is very disruptive to the world of retail. It's difficult for retailers to plan their business. You're going to see a lot of cancellations. You're going to see a lot of retailers make mistakes. And the off-price sector is very good at taking advantage of those mistakes and continuing to drive traffic. And again, mind share for value is what they represent. And we think that's really working in the current environment.
I want to ask about Abercrombie & Fitch. I thought they were in the middle of a turnaround. Urban Outfitters, The Gap, these are all stocks that you downgraded today. Do they have a common problem?
Yeah, I guess I would say the common theme is, specialty retailers generally on the apparel side, I think will have a difficult time passing through price to the consumer. Abercrombie has certainly, I think, executed one of the greatest turnarounds in retail history. This year has been a little bit tougher for them. But I think if you look at the common threads, everyone's going to be facing slightly higher tariffs than when a lot of these companies last gave guidance. We don't think there's a lot of pricing power within apparel. And we think it's going to be a difficult setup, not just for the back half, but even as we think about 2026, some of these tariff impacts are going to carry over into the first half of 26, just based on lead times and the timing of when tariffs are going into effect. And we think it's going to be a challenging next couple of quarters for specialty apparel.
All right, Paul, great to get some insight on these earnings from you. That is Paul Lejuez of Citi Research. And Matt, you mentioned Abercrombie and Fitch. Shares down 38% this year, but you think back to the past 2 years they had higher by 285% in 2023, another 69% higher in 2024. It feels like they did the turnaround and now we're coming back.
Absolutely. I mean, I'm looking at the shares right now. Over the last 5 years, Abercrombie and Fitch is up 817%.
It looks like a meme stock.
Yeah, it absolutely confused me when I pulled it up. I put it against TJ Maxx, which is up 193%. Ross Stores up 80%. Burlington up 48%. But ANF, obviously, it's a very different store than those three. Up 817%, outperforming Urban Outfitters, which is up almost 300. So it's quadrupled, but Abercrombie just stomps it. Really interesting stuff.
The better comp would probably be American Eagle, but we know that American Eagle, the stock has been moving on a lot of different factors
I didn't even know it still existed.
American Eagle?
That was like when I was a kid.
I bought
when people were listening
two pairs of jean shorts there 2 weekends ago.
Shorts, huh?
Yeah, they're back.
I didn't know that was a thing either. Well,
anyway.
Interesting.
We should probably talk about AI.
Maybe I'll get some.
Yeah, maybe. Let's talk about AI next, because AI deals powering a turnaround at Oracle and making Larry Ellison the second richest person in the world. We'll talk about that next. This is Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's take a look at what's going on in stocks today. We do see the S&P continuing to fall and falling further now. Another 0.5% drop here to 6378. We're coming down from essentially 6,500. So we're actually losing ground. On the NASDAQ as well, down more than 1%. As Katie showed you earlier, we have almost all the Mag 7 down, including including Avgo. So Broadcom would make it the Mag 8, and that's a big loser today as well. The Russell is a loser, but the Dow Jones Industrial Average holding steady with all cyclical and industrials on it. NVIDIA is one of the big problems, down 2.6%, and Tesla off more than 2% as well. We do see Toll Brothers. We were talking to Nora Melinda about the home builder earlier on results, actually doing a little bit better, and TJ Maxx continuing to add to the gains that we've seen over the last 5 years. That stock has tripled. Intel, like the curse of the cover, as soon as we start talking about how well it has been doing, it's off 6%. And Oracle, which we're going to talk about right now, also down 2.33%, Katie.
Yeah, well, it's a down market, but Oracle shares, they've risen about 40% year to date. You think about why, and a lot of it has to do with the tech giants' change in fortunes, and they've been powered by major deals with AI heavyweights NVIDIA and OpenAI. Bloomberg tech reporter Brody Ford joins us right now. So there's those deals for sure, but there's also Larry Ellison's change of heart in general when it comes to the cloud unit of this company.
Very famously, 2008, Ellison is on stage saying the cloud is gibberish. I'm not sure we really want to be in this business. And because for a long time, Oracle made money by selling its famous database and installing it right on your servers. And so they didn't want this business model where you're selling computing power over the internet. And Oracle was kind of this wayward, tech giant of a previous generation, and that's really changed in the last couple of years with the AI boom.
So who are his biggest customers? I mean, where's the money coming from, feeding into Oracle and helping the shares rise and Larry Ellison's bank account as well?
So yeah, I mean, Oracle, it's going to be that OpenAI is on track to be the largest customer by far, right? It's going to be that, cloud infrastructure will be the largest portion of the business. And that's because earlier this year, we saw at the White House, they had the, Larry Ellison was standing there.
The Stargate meeting.
Yeah, the Stargate meeting. And so the question now for Oracle is, can they fulfill on all this? We have some details on how they are making some very drastic steps to try to build out big data centers quicker than have ever been done before. And so the jury is somewhat still out on whether they can fully capitalize on the demand.
It's a great story, and I recommend everyone read it on the terminal. Brody Ford from Bloomberg wrote that piece on Oracle and the change of heart that Larry Ellison has had, which helped him become the second richest man in the world. Coming up in the next hour, strategist Matt Maley joins us from Miller Tabak. Morgan Stanley economist Sarah Wolf, plus the CEO of Udemy on AI impacting the next generation of workers, finding it may be tough to get a job out of college. Then Michael Baker joins us from D.A. Davidson. It's a full show. We're going to talk about Ford's potentially $300,000 off-road supercar as well. This is Bloomberg Open Interest.
Let's suppose you hire people in this business and they start losing money.
Yeah.
How long before you say, this isn't for you?
When we bring people on, we're looking for a previous record of success. So we don't train people, particularly on the investing side, right out of college. They would have come with already experience. Then there's also the why are they wrong or why are they right? Are they right for the right reasons or are they wrong for the wrong reasons? And then there's also collegiality. How do you work in a team? But I would say that within a 2 to 3 year period, we, usually you get a sense whether, someone's talent.
Do you ever hire English majors or history majors, or you only hire STEM majors?
I encourage my boys to go to liberal arts and to be in whether it was poli-sci, economics, and be fluent in other areas. So I think having a broad perspective can be very helpful.
If somebody is very good at what they do you say to them, you're very good, but go to business school, or you say, don't go to business school because you're very good at what you do?
So I didn't go to business school, and I think that the markets are a great business school. So it's we don't encourage people to go to business school. We encourage them to take the CFA. That's a good way to get more technical trading. If it was something that they feel they wouldn't be complete without going to business school, there have been people who've done nicely with us who've wanted to go, but that's been more the exception.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Stacey Lynn. There's a massive storm heading up the eastern seaboard.
Even though Hurricane Aaron is expected to remain well off the east coast, mandatory evacuation orders are in place for some of North Carolina's barrier islands. Joe Duva and his family have decided to ride out the storm at a vacation rental in Kill Devil Hills, North Carolina.
We're all hoping and praying for the best.
We decided to keep our vacation and keep it going.
Aaron is generating rough surf and bringing the threat of rip currents from Florida all the way to the Maine-Canada border. Jim Crisula, CBS News.
Texas state lawmakers are expected to vote today on a controversial plan to redraw congressional districts. CBS's Omar Villafranca is in Austin.
President Trump has pushed for the redistricting to help build a more favorable political landscape in next year's midterms. Republicans are expected to approve the new maps, while Democrats here say they're going to challenge this in court.
The new map would take 5 seats that are currently held by Democrats and turn them into Republican-leaning districts. A historic meeting could happen soon between the Russian and Ukrainian presidents, but some Republican lawmakers are expressing concern about how President Trump's been dealing with Vladimir Putin. North Carolina Senator Tom Tillis says
he is tapping us along. And I hope that people just stand up and recognize he's a liar, he's a thug, he's a murderer, he's a rapist, he needs to go.
And CBS News has confirmed Budapest is among the cities being considered for the face-to-face talks. The Israeli military says it will call up 50,000 reservists as it plans a new phase of the war, occupying Gaza City. The BBC's Yolande Nell.
We've had an Israeli military official confirming that the call-up of these tens of thousands of reservists will take place in the coming weeks, that other reservists will have their terms of service extended, and of course there are active duty soldiers who will be involved in this Gaza City operation as well.
Vicky Barker reports there's some new hope for people whose sense of smell isn't what it once was.
South Korean researchers had volunteers sniff 3 different odors in ever-decreasing concentrations, meaning the smells were fainter each time. Starting out, their average score was just under 10 out of a possible 16. But after their brains were painlessly stimulated with radio waves set to a specific frequency, their scores rose to a near-perfect 15.8, and the effects lasted up to a week.
Now, those researchers say they want to see now if this same technique could even work for those who've lost their sense of smell entirely. Wall Street's open for business. Dow is up 43 points in early trading. NASDAQ is down 212. This is CBS News. Remember when Elon Musk was talking about forming the America Party?
The Wall Street Journal reports Elon Musk is pumping the brakes on his plan to start a new political party. The paper says Musk has told allies he wants to focus on his companies and maintain ties with Vice President J.D. Vance as a possible MAGA movement successor. The two have stayed in touch since Musk left the administration, and starting a political party could damage that relationship. The Journal says Musk has told people he'd consider using some of his wealth to back Vance if he runs for president in 2028. Steve Kathan, CBS News.
The Air Guitar World Championships kick off today in Finland. The best air shredders wear wild costumes while rocking out with their imaginary guitars. Last year's winner,
from Canada,
he jammed out to Nickelback to win the grand prize, which was a custom-made flying Finn guitar. Stacey Lynn, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. Head over to youtube.com and search Bloomberg Live Podcast. That's where you'll find us. Alexis Christoforous joins us the next 2 hours. Alexis, welcome.
Thank you so much. It's great to be with you and the fam here.
Good stuff. Got a big day here. Got some selling in the marketplace. We'll get to that in just a moment with the stocks on the move. Ryan Valesteca, Bloomberg Equities reporter, will give us the latest on the tech stocks, kind of rolling over here in the last couple of days. Again, about a 1.5% sell-off in the NASDAQ here today. We'll break it all down. Chris Condon, Bloomberg Federal Reserve team leader, on this strange story. President Trump demands the Federal Reserve's cook quits as Pulte seeks mortgage probe. So some more pressure by the president on members of the Federal Reserve. We'll have that reporting as well. Rebecca Walzer, president of Walzer Wealth, will get her sense of the markets. Deb Aitken's going to join us, Bloomberg Intelligence. She's over there in London. She covers all things luxury. So we'll break down some earnings from Estée Lauder and how's the world of luxury doing. Always wonder about that kind of good stuff. So a lot to come to over the next couple of hours. Let's kick it all off. John Tucker, NA Bloomberg Business Flash. John.
All right, after that tech sell-off that we saw yesterday, it sent the NASDAQ down about 1.5%. Shares of NVIDIA lower again. In fact, they're the worst performing stock in the S&P 500. Right now down 2.4%. If Target shares slumping, Wall Street was hoping for an outsider to take over the company's leadership. Instead, they got the current chief operating officer. Target maintaining its full-year guidance. Lowe's second quarter adjusted earnings per share above what analysts expected. Also an acquisition. Christine's going to have more on some of those in just a minute. Meantime, Lori Calvasina at RBC Capital Markets doesn't see much more upside to stocks.
We don't feel bearish, but we have felt rather neutral heading into the back half of the year because we do think we're trading well ahead of 2025 fundamentals, and we do think a lot of the good news for 2026 that people are anticipating is already baked in.
7 of the 11 major industry groups in the S&P 500 higher right now, being led by consumer staples. Worst performing group right now, the bottom of the barrel, information technology. The S&P 500 50 points lower. It's down about 0.8%, 63.61 on the index. The Dow Jones Industrial Average down 74 points. That's down about 0.2%. The Nasdaq 100 328 points lower. That is a decline of 1.4% right now. Bloomberg reporter Dina Shanker writes that it's a stoner food fantasy, Paul and Alexis. Taco Bell serving up an almost endless stream of new menu items, including the Big Cheez-It Tostada and Big Cheez-It Crunchwrap Supreme. Don't ask me how many calories. The latest financial reports show Taco Bell doing more than just staying afloat. They're zooming past the competition with these offerings. The Spicoli effect, remember that? We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Alexis, you know how far back I go with Alexis Christoforous?
Go.
Oh, brother.
It's a few years.
It's a few
Just
years.
a few. We'll leave it at
It's
that.
like a reunion in the
You
studio.
guys are veteran broadcasters. That's the way to put it for our listenership, right?
We've worked everywhere and worked with everyone.
That's a dangerous word, Paul.
That's right. Legendary. All right, John Tucker, thank you so much. We appreciate that. As John was just reporting, selling out there in the marketplace led by the NASDAQ. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Alexis Christophorus, and we're joined by Bloomberg's Christine Aquino. Christine, what are you looking at?
Well, John Tucker mentioned it, so let's talk about it. Target, ticker TGT, shares down today, so down currently 8%. So pairing some of those opening bell losses, but as John Tucker mentioned, it is in fact a reaction to the new CEO, who's going to be next CEO rather, Michael Fidelki. And, you know, the reaction is really, according to D.A. Davidson's Michael Baker, it's not really a knock on Fidelki himself, but the announcement, quote, lacks the pop that a significant external hire would provide. That is according to D.A. Davidson's Michael Baker. And we know that Target has suffered a streak of underperformance against its competitors. It has lost market share. And Bloomberg Intelligence is noting that the company now needs to show that its tactics to drive store visits and spending are working, which evidently that's not how investors feel at the moment anyway.
Yeah, stock down about 8% right now, right?
I would take that personally.
Yeah,
if I were the CEO.
It's hard not to.
It's hard not to. But, you know, he's a veteran. He started as an intern in 2003, and he worked his way up. But, you know, but it's just not landing with investors.
Okay. I think it's just, I don't know.
There's just a lesson there. Always be nice to the interns.
Yeah. Always be nice to the interns.
And also take those internships seriously, young folks, because they can turn into something.
That's right. That's right. Lowe's.
Yeah, let's talk about Lowe's, ticker LOW. That's having a better day today. Shares up, slightly less than 1% now, but at one point it was up more than 3%. And we have an M&A deal. Again, Lowe's agreeing to buy Foundation Building Materials for $8.8 billion in cash. So Foundation Building, it's a distributor of drywall and other building products, 370 locations in the U.S. and Canada, and $6.5 billion in sales last year. So the analyst reaction to this acquisition, very positive. Citi calling it, quote, transformational and is a pivot in capital allocation strategy. And of course, the good news also from Lowe's from their second quarter results, adjusted EPS beat estimates there.
Now, I like your next stock that you're watching.
I'm very excited about this.
I've never heard this one before.
Pop Mart.
Pop Mart. Yeah.
Tell us about it.
Yeah. POPMF. Those shares popping today. They were up earlier, 18%. That was the biggest gain since early June. Bearing a little bit now, just up 12% at the moment. And so Pop Mart, they're really known for their Labubu dolls. Right?
Say that fast 5 times.
Yes.
Labubu. Labubu.
What is the Labubu cost? What does that cost, one of those dolls?
What are they like?
It depends on whether you get the limited edition ones, John. The thing is that they're hard to find, and that's the joy of it. But, you know, like celebrities like Kim Kardashian, Brad Pitt, very much into this. And so the big news from today is that they're planning to announce a new mini Labubu. And yeah,
they still our hearts.
This little doll has been their cash cow for the first half of 2025. It led to a 204% increase in year-on-year revenue. And the CEO Wang Ning was saying earlier this year that he hoped to hit sales of about 20 billion yuan. That's the equivalent of $2.8 billion. But now he says that 30 billion yuan is, quote, would be quite easy.
But this is a Chinese-based, mainland China
This
company?
is a Chinese toy maker, and they
So
have...
are we putting tariffs on these things?
Good question.
I don't know.
Yeah, I mean, I don't think
There's got to be a
Labubu was
carve-out
specified.
for these dolls, I would think.
Was Labubu
would be
specified as a
affecting the
line
company.
item on the tariffs list?
Who's
Maybe.
All right,
Who's their competitor, I wonder?
Yeah,
Pop Mart.
it's just they just compete against general other toy makers, I guess.
I think so, yeah. But I think they really hit it big with this particular one that just reached cult status like overnight.
Sort of like Funk Pops in a way.
Yeah.
I'm looking at this thing. It says, my Bloomberg terminal, I don't know what we're looking at, dollars or what here, $54 billion market cap. I'm not sure if it's dollars or yuan.
Or yuan.
I don't know. All right, very good. So we'll do that. We'll do the Labubu dolls. But again, aren't these the little things that you put on your...
They are, yeah, and they've become a bit of a status symbol as well.
Okay, so this is something kids are collecting because it's more expensive.
No, it started with kids, but then it very quickly ballooned into an adult craze.
I see them walking around the city here. People have them dangling off their bags.
Yeah. It's the new. It's probably like you could liken it to Beanie Babies, right?
Okay.
Sure, I think that's a good. That's a good one.
comparison.
Don't underestimate the power of the Labubu.
All right.
Yeah.
Very good. All right, Christine Aquino, we appreciate that. Christine Aquino, managing editor for Markets Live. And if you want for more conversations like this, subscribe to our new Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I'll tell you a story just kind of crossing the Bloomberg terminal here. And it's got a green B, means Bloomberg News is breaking this. Citi investigates HR complaints against wealth head Andy Sieg. Citigroup has hired law firm Paul Weiss to investigate complaints about the behavior of the bank's wealth management chief, Andy Sieg, who was brought on by Chief Executive Officer Jane Fraser as a high-profile hire to drive a key part of her turnaround plan. And one of the reporters on this story joins us now in our Bloomberg Interactive Broker studio, Todd Gillespie, Bloomberg finance reporter. Todd, talk to us about what's happening over at Citigroup with their wealth management chief, Andy Sieg. Am I pronouncing that correctly?
Sieg is correct, yeah. Yeah, exactly. I mean, well, what we do know is that, so Andy Sieg, ran Merrill for Bank of America's wirehouse for 6 years, came on in 2023 to turn around the wealth business at Citigroup, which was ailing, was a key priority for Jane Fraser's turnaround of, Wall Street's one of the least profitable banks on Wall Street. He has been there for just under 2 years. But in that time, he has drawn several, we know from at least 6 managing directors, complaints about his behavior, particularly his treatment of senior female executives, including Ida Liu, who left the bank after 18 years in January. Some of you might remember that. It was quite a sudden departure. And also towards his behavior towards one of the current direct reports who runs the Wealth at Work business there, a woman named Kristen Bitterly.
Now, this type of behavior, it's not, from what I'm reading in your story, it's more just the way he speaks to them, or maybe speaks of them, or just it's not necessarily any sexual type of thing as far as we know now. It's just more his management style, perhaps?
Precisely, yeah. Okay. We call it, there's intimidating behavior. Okay. There are expletive-filled rants. We know about him reducing a male managing director to tears after berating him in front of colleagues, calling people's work pathetic in meetings with that person present and their colleagues present. And also undermining Ida Liu in particular. And his COO, a man called Valentin Valdrabano, directing a managing director to exclude her from correspondence that was important to her business in the months before she departed the bank.
Well, let's talk about just his performance business-wise, right? I mean, under his tenure, the unit reached record levels, improved returns. What was his style, if you will, under that wealth division?
Yeah, absolutely. And it is important to note that, Citigroup appear to be standing by him. They do note, that he's really improved profitability at the bank. The second quarter revenue, was a record. And he's really done that by essentially moving the unit's focus away from what was quite a lending intensive, balance sheet heavy private bank focus towards, I guess, more of a wirehouse style, you might say, like Merrill Lynch, where he, basically grew up in the business. He's focused on attracting investment assets into the business and reducing that dependence, on the balance sheet at the bank. And that seems to have reaped dividends.
Todd, great reporting here by you and Emily Flitter. And folks, check this out on the terminal. Great reporting here by Bloomberg News on Citi, and we'll have more reporting on that. All right, folks, that was Todd Gillespie from Bloomberg News. Get the latest news whenever you want it, folks. Coming up, we'll have more. Chris Condon, Bloomberg Federal Reserve team leader, he's going to talk to us about President Trump was calling for another Fed executive to step down. We'll get the latest reporting on that. More coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The sell-off in tech, that continues today after yesterday's 1.5% decline in the NASDAQ. The gauge of the Magnificent Seven stocks, the Bloomberg gauge, right now down 2%. Worst performing stock in the S&P 500 belongs to Target right now. It is down just over 8%. They picked an insider to be the new CEO. Investors wanted an outsider. Target also missed expectations. And then you had another retailer, TJ Maxx parent TJX, raising its full-year earnings guidance. TJX shares right now, they are up close to 5%. And then better than expected margins helped Lowe's beat estimates for the second quarter. They also agreed to buy foundation building materials for about $8.8 billion. That's in cash. That company makes drywall. With this purchase, they're moving further into serving more professional customers.
Have you heard of that company?
Never heard of it.
Never heard. $8 billion for drywall.
Wow.
Cool.
Yeah, investors going to get more insight into the Fed's policy trajectory with the release of the FOMC's minutes. That's about 2 o'clock New York time. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Paul.
All right, JT, thank you so much. We appreciate that. Alexis Christophorus and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, Midtown Manhattan, streaming live on YouTube as well. So go find that internet thing and search for Bloomberg Podcast Live, and that's where you'll find us. How about this? President Donald Trump today called on Federal Reserve Governor Lisa Cook to resign after Federal Housing Finance Agency Director Bill Pulte urged an investigation of Cook's mortgages. That kind of came out of nowhere, but let's break it down with Chris Condon. He's a Federal Reserve team leader for Bloomberg News. He's down there in Washington, D.C. Chris, what do we know about this story that's just kind of developed this morning with a tweet from the president?
Sure. Well, it broke last night. Bill Pulte, as you said, has referred Governor Lisa Cook to the Justice Department, urging them to investigate her for potential mortgage fraud. He is claiming that, among other things, Cook has multiple mortgages out on which she has listed the properties as her primary residence. Doing so can help secure preferential mortgage rate and so for some products, and to do it for more than one property at the same time, of course, would be inappropriate. We do not know anything about the veracity of these allegations. They did provide some documentation that has yet to be stood up completely, but it's a serious allegation. And Trump has quickly followed with this call for Cook to resign. So taken in a vacuum, it's a serious allegation. If true, would be something seriously inappropriate. But of course, it does not exist in a vacuum. The administration has been making similar accusations against other Democrats or Democratic appointees. The same accusation was made against Senator Paul Schiff of California and against New York's Attorney General Letitia James. It seems to be part of a systematic approach to dig up allegations of impropriety against what you might say are political enemies. In this case, it's a Fed governor who has stood with the Fed chair in resisting the president's calls for lower interest rates at the central bank. So taken into context, it's quite a remarkable development and is a major escalation of the White House's criticism of an attack on the Federal Reserve.
And Chris, certainly a resignation by Cook would create another opening, right, on the Fed board for President Trump to continue to shape this Federal Reserve. You mentioned this is a tactic they've used before with other high-profile Democrats. Do you think it's going to work this time?
Well, it all comes entirely down to whether they can back up the allegations with the evidence. We have yet to hear from Governor Cook. on this, or from the Federal Reserve. They have so far declined to comment. We really have to just wait that out, see which side can either stand up the allegations or knock them down. But you're right. If this does end up resulting in a departure from the Fed, Governor Cook, and I'm not saying that's likely at all, but if it were to result in that, it would create an opportunity for President Trump to nominate a new person, presumably someone who would align with his views on monetary policy, just as he's done in filling a vacancy that exists right now. Governor Adriana Kugler unexpectedly resigned early. Now, her term was due in January anyway, so it wasn't that big of a shock, but Trump has since nominated the chair of his Council of Economic Advisors, Stephen Myron, somebody who agrees with his view on interest rates, to fill that post. This would be yet another one. So it's an interesting tactic for creating new openings. I don't know if it's going to work, but that would seem logically to be part of the goal here.
All right, Chris, thanks so much. We appreciate you jumping on here. Chris Condon, Federal Reserve team leader, Bloomberg News. Again, President Trump demands Fed's Cook quit as Pulte seeks mortgage probe. That's the headline. The reporting's on the Bloomberg terminal on Bloomberg.com, so check it out. We'll continue to report on that going forward. We'll get back to the markets here, where we do have a sell-off. The S&P's off 0.8%. The NASDAQ's off 1.5%. Let's talk markets, and we welcome Rebecca Walser, president of Walser Melf, joins us here in our Bloomberg Interactive Broker Studio. Rebecca, thanks for coming. I know you're based in Tampa, coming up to the big town. We appreciate that. Burn Steakhouse, they love me down there.
Great.
What are you telling? What's the message you have for your clients these days? They've seen the market sell off 20% earlier in the year, and now it's come roaring back. What's kind of the message you have for your clients?
I think the message is, unlike the kind of the .com revolution that we had, that was, new technology, and you could just basically throw a dart at the thing and pick a winner. This is not that. This fourth industrial revolution is going to be different and rocky, and you probably can't do it passively, and you probably need professional management, because it is not the old scenario.
Critics have said this market has run up too far, too fast. And as Paul mentioned during yesterday's show, it's really been concentrated in just a handful of heavy hitters.
Yeah.
Do you see that changing? Will there be new leadership?
We definitely need to broaden out, beyond obviously Mag 7, beyond Palantir and those types of things. But this is a technology revolution, but it will touch everything. So every sector has got to figure out how it's going to impact their sector and get on board and do it fast. We don't see that broadening out just yet, because we're not at the monetization stage just yet. And actually, that's the scary stage, right? Because we all have these, if you look at current PEs, not forward PEs, but if you look at current PEs, you got Microsoft in the 60s, you've got NVIDIA in the 50s. That's what we would consider insane potentially, right? But if you look at the forward Ps and you look at the forward projections of revenue growth, then you can say, oh, okay, this is doable. But those are projections. So as we monetize and realize what the actual revenue is going to be, that's when you're going to see pullback, because that's when we're going to get reality hitting, expectation. And so that's what we're really interested in, is where will the monetization fall? If you look at .com as the most recent example, you'll see that we had a several 2-year .com crash situation as it actually monetized. I don't know if we'll get that much of a pullback, but these are really extremely high valuations, and this market's priced for perfection. If you look at just 2 quick examples, Eli Lilly just having their GLP-1 not do as well as efficacy, and they pull back 15% after hours. If you look at Trade Desk, 39% pullback overnight from, and they were both double beats. So this is a market that is priced for perfection, and as we monetize and see things maybe not turn out exactly as we projected, it's going to be problematic for some people. So that is why you need to understand that we are not in just throw a dart at it and everything's fine.
So at Walser Wealth Management, how do you construct a portfolio? Is there a typical portfolio or model portfolio that you start with your clients with?
Well, we really believe in pairing kind of risk on with risk off. Everyone is so big on risk on, and we love risk on right now. We have a frontier fund that we really focus on the 4 main core new technologies that are coming to the forefront. Everyone talks about AI, but there's a lot more. There's quantum computing, there's blockchain, there's robotics. So we're really focused on all the technologies that are going to be implemented. But beyond that, we also say, hey, we are facing, and for example, in 2025, what we we are calling a maturity wall. You know, we have 1/3 of marketable debt has to be refinanced this year, $9.2 trillion. This is why Trump is so, you know, adamant on getting a rate cut, because the way this previous administration really financed our deficits was on the short end of the curve, 2 years or less, which means that those things are coming to maturity and having to be refinanced at a Fed funds right now of 4.25, 4.5. So we have to get some rate cuts if we're going to continue to be able. Interest is going up to the number 2 expense in our country. It's unsustainable. And so we've got a monetary fiscal problem with the fourth industrial revolution converging. It's going to be very, very interesting, but we have to look, and to answer your question specifically, Paul, we have to look at individual investors. When do they need to have cash flow coming in? And that's what their risk tolerance would then dictate, is because we have to be able to give, hell or high water, people have to live. They have to live off of their investments. So we have to understand what their risk profile is and where they are in their life cycle.
Rebecca, you've called inflation the issue of our time.
Yeah.
So, on the eve almost the eve of our Fed Reserve Board chair speaking over there in Jackson Hole, what is the bigger risk, higher inflation or lower unemployment?
Ooh, those, of course, there are two mandates. I think the bigger risk is that we, right now, you saw that we reached the highest M2 supply in June of this year, and we have an annual year-over-year growth of M2 of 4.5%, which would suggest robust growth and robust earnings. But when your interest has almost tripled in 2025 since 2020, what you can see is that the debt is outpacing the growth, and that's the highest and the biggest issue. And the only way the government can deal with its budget is either raising taxes or printing, and both of those are costing us at the value of our dollar. So we really need to figure out, will AI bring enough growth? Will the fourth industrial revolution bring enough growth to surpass the interest growth that it costs to bring it forward? And if it doesn't, then we're looking at new currency models and new transitions to a new way of dealing with governments. And that's really interesting with this Trump administration, kind of almost like a sovereign wealth fund like Saudi Arabia and the UAE, even though those are kingdoms, and I recognize those are kingdoms and not democracies or republics. The fact is that, Biden with the CHIPS Act, he's investing $52 billion into getting manufacturing of semiconductor chips here in the United States, but we weren't getting anything for that. So Besant and, Letnick and all these people are out there saying, why aren't we getting some return for these grants? And the truth is, we're going to have to, because we cannot sustain the debt level that we have without private investment.
Very good. Appreciate it. Great stuff. As always, appreciate getting a few minutes of your time. Rebecca Walser, president of Walser Wealth Management, based down there in Tampa, joining us live here in our Bloomberg Interactive Broker Studio on a day where we're seeing a little bit of selling out there. Could be a buying opportunity for some. We'll see how it plays out. But we definitely got some red on the screen. I'm going to call it out for Tom from the Upper East Side. His VIX shooting higher here. We're just below 17. Remember, we had a 14 handle on it just yesterday, so the VIX kind of creeping up a little bit. BitDog, as Tom refers to it, just under 114,000. Gold getting a little bit of a bid out there as well, so we'll keep an eye on that. Coming up, Jen Bartashis, Bloomberg Intelligence, senior analyst. She covers the retail space. She's going to talk to us a little bit about Target, the earnings, the new management, all that kind of stuff out there. How's the consumer? Because we're starting to hear from a lot of the retailers this week, and gives us a good handle on how the consumer is doing out there. So we'll have that coming up in just a moment. Again, the S&P 500 off 55 points, 0.9% on this Wednesday morning. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And the tech sell-off, that continues today. The Bloomberg Mag 7 Index, right now it is down 2.3%. It also includes shares of Intel dropping 6.9%. The tech sell-off as the chip makers are erasing most of the gains driven yesterday by the SoftBank taking a stake. The news coming yesterday about that. Here's one that could be a canary in the coal mine. James Hardie, ticker symbol JHX. Those shares, they are down right now close to 36%. This after the building materials maker reported net sales. They missed analysts' expectations. They also warned of weak demand for construction in North America, so pointing to weakness in housing. Target shares right now, one of the worst performers in the S&P 500. The retailer's pick for an internal CEO offset better than expected second quarter results. And as Fed officials convene in Jackson Hole, and later today we're going to get the FOMC minutes, Andrew Balls of PIMCO says there is room for policymakers to cut rates.
If you look at the Federal Reserve's policy rates, there's plenty of room for conventional monetary policy easing. And so our expectation over time would be that there's potential for the Fed to cut rates significantly lower than the market is pricing.
The S&P 500, 59 points lower, 63.51 on the index. The Dow down 110 points. The NASDAQ 100 down 387 points. The FDA has advised the public not to eat a brand of shrimp sold at Walmart. They told Walmart to pull 3 lots of raw frozen shrimp sourced from Indonesia. Officials detected radioactive cesium-137. And as a shrimp eater, I can tell you, radioactive shrimp. I mean,
stay away.
Stay away. That's my advice. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Paul.
All right, JT, thank you so much. We appreciate that. John Tucker with our Business Flash there. Alexis Christophorous, Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio in Midtown. We're streaming live on YouTube as well. John was just mentioning Target stock down 7.5%. Tough numbers. That's one thing. I mean, the results were not great, I didn't think, but what do I know? And then the CEO, you're bringing in, keep an insider there. I think maybe the street wanted an outsider, as John was suggesting. Stock down 7.5%. I don't know, if I were this guy, I would take it personally. Let's see if Jen Bartashes takes it personally. She's a senior retail analyst at Bloomberg Intelligence. She covers Target and all these names. Jen, let's start first with the CEO news here. What do you make of this person, and should they maybe have gone outside the company?
Good morning. Yeah, it's an interesting choice. And I think that investors for a little while now have been interested in seeing a CEO change. Brian Cornell has done a great job during his tenure, at least initially in terms of really driving growth for Target. But an internal choice really implies much of the same strategy. And I think there was some hopes that there would be something a little different to maybe shake things up and bring something new to the company.
You know, I'm wondering if Target is going through an existential crisis, right? Sort of this identity crisis. Because you feel like, I don't know about you, Paul, I know the last time you went into a Target.
Sure.
But you feel like they've lost their mojo, Jennifer, because the last time I was in there, the store shelves were not stocked very well, felt disorganized, couldn't find a sales associate to help me. What does this new CEO have to do to help this company get back on track?
Well, you know, it's very interesting. He's highlighted 3 priorities, but they're not really new priorities. But if they can bring focus to it, maybe that will help. And that's, you know, re-energizing the assortment, bringing back some of that style and, you know, value that people crave. It's about having a very good, consistent in-store execution and experience, which is what you were actually just talking about. Having things in stock, having associates available, and then the third is an acceleration in the deployment of technology to maybe make processes faster, improve efficiency, that sort of thing. So we'll see if that, if that happens, but it's really about getting back to what is it that consumers loved about Target, and how do you get them back in that frame of mind so that they come to stores and spend there.
Well, you're the expert here. Like, I don't have a sense of what people go to Target for. What do you think they go to Target for?
Well, what they traditionally have gone to Target for was that sense of discovery, right? You had a couple of things on your list, you got in and you were inspired. You saw home decoration items that you just were like, oh, that would look great in my living room. Or you would go through apparel and you would see something very stylish and value that you thought, oh, that's a great thing to add to my basket. And so that's what's a little bit missing. And part of that may be because of just the rise in digital orders. It's a less conducive to those impromptu purchases, but it's also inspired by the assortment and by what people experience when they're in the stores. And that's really where they have to focus to get that magic back.
And Jennifer, correct me if I'm wrong, I think Target has more exposure to tariffs than, say, Walmart because of its mix of products. It doesn't have as much exposure to groceries as Walmart does, but it gets a lot of its products from overseas, places that are getting hit by these tariffs. How did that play out in this quarter, and how will it play out going forward?
Yeah, it's a great question, and it is one of the things that's sort of been bogging down Target. Ever since we've had very high food inflation, that willingness to spend on discretionary categories has been a little bit more limited, and that's really the area that Target has always excelled. Things like apparel and electronics and toys and home decor. And so, right now the company's saying they're doing a pretty good job of mitigating tariffs, but they are more exposed because of the merchandise mix that they have. So they said they've done some right sizing. They've paid off kind of the one-time cancellation charges they had while they were waiting on the tariff verdicts. We'll see what unfolds in third quarter, and especially because it's back to school, which is a really important quarter for Target.
What's always, well, I guess more than hold their own. Talk to us about Target and their digital strategy. How's that performing?
Overall, Target's digital strategy has been doing pretty well. They've made a conscious decision to not go head-to-head with Walmart and Target. So, for example, in their marketplace, it's not just a endless aisle of sellers. They have a very close criteria of who they let onto their platform, and that's worked well for them because it helps keep the product selection closer to what people expect from Target. Their digital sales were up in terms of same-store sales this quarter, well outpaced the visits to stores. And so they've been executing pretty well there. It's just a matter of how do they marry the two parts of the business to grow simultaneously.
I want to look ahead to tomorrow because we get Walmart. They may strike a more cautious tone here. I'm curious if they're going to actually say the word tariffs, Paul and Jennifer, tomorrow, because last time when they did, Trump told them to eat the tariffs because they said they were blaming the tariffs on having to raise prices. What do you think we're going to hear from Walmart tomorrow, Jennifer?
Well, I think tomorrow with Walmart, it's going to be more about the value-seeking behavior of customers. I think that any of these retailers, they're holding price increases back to the last possible resort with regards to mitigating tariffs. Walmart will certainly be asked about it. They certainly won't disclose any specific information about the cost of tariffs on their business or the specifics of how they're mitigating them. But I think they will remain very cautious, and they have warned that there could be volatility from quarter to quarter, especially with regards to their margins. And we may see a little bit of that play out tomorrow.
30 seconds, Jen. What's the holiday look like, do you think, so far? What's the early take?
With regards to holiday season, I think the retailers have good strategies to have streamlined inventory in place. It's really going to come down to how confident is the consumer and how much are they willing to spend.
All right, very good. I'll be clicking some buttons, I'm sure, walking down some aisles. We'll see. Jen Bartash is senior retail analyst at Bloomberg Intelligence. She has a much longer title, but I'm just not going with it because I don't recall approving senior retail staples and packaged food analyst. I'm not going with that. She's my senior retail analyst. She covers all of it, and she knows what's happening. She's down there in Princeton, New Jersey. So Target, I don't know. I mean, can you not go to Target? Don't you kind of have to go to Target for stuff?
You know what? I think a lot of people are going to TJ Maxx for stuff. We saw their earnings today.
Really?
Pretty good.
Well, I learned from Alex Steele and from Lisa Mateo about the whole TJ Maxx thing, that you can get really good brands off price, right?
Oh, yeah. Welcome to the party, Paul.
I know. I had no idea. So I got completely schooled by Alex and Lisa. So now I think I know a little bit about it. Coming up, we're going to have some more on the earnings front and more on the eco front. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Live here in our Bloomberg International Brokers studio, streaming live on YouTube as well. All right, so I walk Penn Station from the Bloomberg HQ every day, or I try to. So I walk down Fifth Avenue, Madison Avenue. Shops are packed. The streets are packed. I see tourists from everywhere but Asia. A little bit light there, and I know Asia is a big part of the luxury trade there. So I want to check in with Deb Aiken, luxury goods analyst with Bloomberg Intelligence. Deb, I know Estee Lauder reported profits here. What did you hear from Estee Lauder about their business?
So, yeah, actually tying in with what you said there, they're doing well out of the US, improving their numbers for the full year are still down, but you could see sequential improvement by end of year. And also somewhat less soft in China. But for them, where they still have so much exposure in Asia, and still particularly in travel retail, inventories to me still look stuffed, even though if I think about travel retail overall, it's 15% of their business now. It was near 30% 4 years ago, and they're losing about 4 points of growth annually. For me, when I look at the inventory data, over 200 days versus 190, it still says that there's risk there for me. So they need to right-size Asia. They need to do more in getting out of main stores in the US. They're doing a lot positively on things like Amazon Beauty and in Asia on TikTok, but it's all moving online. So it's a third of their business online. A lot going on, a lot of cost savings, cost cutting, and very low on margin, and that the company is actually taken away quarterly guidance. And forecast for EPS on the full year are 6 cents below the 210, 216 is expected by consensus. 210 on guidance at the top end is already a little bit below. So shares are weak again on the back of a couple of years of underperformance.
Deb, definitely, as you just laid out, a few tough years for this legacy brand. But explain to me why there were some upgrades recently. I was surprised to see Deutsche Bank, HSBC upgrading from hold to buy. You got JPM upgrading to overweight. What do they see here that maybe others on Wall Street are not?
I think, especially as we've headed through the last couple of quarters, you can see that there are share gains, market share gains in some categories in some countries. So Japan positively, some parts of China by the end positively, some categories in the US positively as well. And there are very easy comps that they will cycle through in the next year ahead. And certainly under the CEO and the CFO, there feels just a lot more momentum and energy to come. So I think that's what the market are buying into, as well as the underperformance that we've seen. But we must remember, in terms of them being competitive and what they're doing, they talk about a solid double-digit adjusted EBIT margin. This will back their investment and then being in front of the consumer, their innovation pipeline and others. They're only at 8% at the end of fiscal 2025, and they say they get to a double-digit adjusted EBIT margin over the next few years. That to me says there's still a bumpy ride. So I understand why those quarterly numbers have gone.
Right. Hey, Deb, Estee Lauder said the tariffs are going to cost them about $100 million to profitability this year. What are some of the luxury companies, the brands that you follow, are they taking these tariff costs into their P&L? Or are they trying to pass them along to customers? What's been the strategy so far?
Yeah, and certainly for the very high end, we saw, even at the beginning of the year, pre-tariff announcements, the very high end, like Hermes would say, because of wage costs and others, we'll be looking at 5 to 6% price increases, started passing those through the beginning of the year. And then in May, when the spring summer collections came through, they then have commented generally for the luxury space, and from the work we've done, that some may need up to 4 or 5% price to be passed through. And the plan is that they pass most of it through. I don't think very much of it goes up or down the supply chain, and it's going to be done gradually in some categories, rather than some can clearly pass it through more visibly than others. and some will struggle more. And then we heard the news from Switzerland with the 39% tariff. So companies like Swatch for us will find it difficult. Companies like Estee Lauder, where it's not every brand that is resonating with the consumer, will find it difficult in some brands, in some categories. So that's why I think we wait quarter by quarter and across the rest of the year to see what companies do need to take a little bit of that on board. But most of them are finding cost cutting as part of that. And certainly on the gross, we did see for full years 40 basis points improvement on gross margin for Estee Lauder, with a little bit of that tariff impact mixed in there, and that they're expecting further gross margin improvement in 2026.
Deb, outstanding work there. Thank you. Appreciate it. You are our go-to voice on all things luxury. Deb Aitken, a luxury goods analyst, Bloomberg Intelligence, joining us from our London studios, Queen Victoria Street. Folks, next time you're in London, stop by, check out the office. It is extraordinary. They did an awesome job. It's a great place to work. We got a lot of good folks over there. Again, I'll walk down Madison Avenue and Park Avenue today. It's be packed.
It is.
Tourists everywhere.
It is. But you remember, I wanted to ask her about it. We had to let Deb go. The lipstick index. Remember that?
Yes.
You go out, even if we're in an economic downturn, which I'm not saying we're in right now, but people would still go and spend on lipstick because it was an affordable luxury.
Right.
Estee Lauder doesn't seem to be benefiting from the lipstick index.
The cravat, which is ties. People will not buy suits.
I prefer,
they used to.
I
Nobody
prefer
wears
the
ties.
Bacon, egg, and cheese index, which we have on the terminal, the bacon, egg, and cheese index. So anyway,
very scientific.
Sorry there, Mark. I screwed up on the grammar. We'll get it next time. We're going to have more coming up here. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Alexis Christophorus, Paul Sweeney, live here in a Bloomberg Interactive Broker studio, streaming live on YouTube as well. Red headline crossing the Bloomberg terminal. Microsoft curbs early access for Chinese firms to cyber flaws here. So again, Microsoft cracking down a little bit there. We'll have some more reporting on that for you in the coming up here. Coming up in this hour, we're going to check in with Michael McKee. He's out there in Jackson Hole, getting ready for that economic symposium that they do out there. Fed Chairman Jay Powell speaks on Friday. We'll have full reporting there. Drew Redding, home building analyst, will lay us out what's going on with our friends at Lowe's. Big acquisition. You don't see these, like the Lowe's and the Home Depot's making big acquisitions, but they bought a foundation building company, $8.8 billion. So we'll break that down. Brody Ford, Bloomberg tech reporter. Talk about Oracle riding some major deals with OpenAI and NVIDIA to hopefully a cloud turnaround there. And then absolutely one of our faves on the Fed discussion, Danielle DiMartino Booth, CEO and chief strategist for QI Research. She'll be in our New York studio. She always looks at data that I've never heard of, but to her it makes sense, and it gives her some really good predictability as she takes a look at this Fed and what we might hear from Fed Chairman Jay Powell. So a lot coming up in this hour, and let's kick it off. John Tucker with a Bloomberg Business Flash.
And this Bloomberg Business Flash is being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the tech-led sell-off, it's extending into a second day today. The tech stocks, they were under pressure yesterday, led by Palantir and NVIDIA. Investors worry the tech rally due for a pullback or a correction. And today, the Mag 7 index down just about 2.5%. In fact, Palantir Technologies, worst performing stock right now in the S&P 500. It is down 8.4%. Not too far behind on your scorecard there. Target, those shares down 8.4%. Investors don't like the new CEO because he's kind of an insider. Meantime, David Rosenberg at Rosenberg Research says the U.S. economy is very weak.
Even with the big, beautiful bill, it's not going to be adding a whole lot to growth. A little bit. And I think that the tariff uncertainty is still going to be a big element. And the Fed's going to be deliberately slow to cut interest rates.
Right now, the S&P 500 62 points lower, down 1%, 63.49. The Dow down 100 points. That's down about 0.2%. The Nasdaq 100 392 points lower. That is another 1.7% decline on the index. Ford is stepping up its racing activities, looking at developing a supercar. And this is actually for off-road racing. Remember Dakar, I think it is like the one through the desert.
Oh, that's right.
Of Saudi Arabia. Jim Farley, the CEO, telling Hot Pursuits on Bloomberg, the podcast, he envisions the vehicle as a dirt-loving, high-performance machine that could compete in the Desert Rally Endurance race in Saudi Arabia. I'm sure Matt Miller at this point is volunteering to be part of that race team. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Alexis and Paul.
Yeah, Matt Miller was posting to social a couple of days ago just some of his silly toys he has, like this Mustang high. I don't know what it is.
He's got a deal where he does review the vehicles as part of Hot Pursuits, so
he gets to drive them.
The car companies will give it to him for like a week or two.
Fun.
I saw him in the garage with a Rolls-Royce Silver Shadow.
Just give a new toy.
Just get
He's
out of
also
the
got
way.
like a Harley Davidson. I don't know what's going on there. All right, John Tucker, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney with Alexis Christoforous, and we're joined by Bloomberg's Carmen Reinecke. Carmen, what are you looking at?
Yeah, so I'm looking at a few retailer names this morning. First is Lazy Boy, ticker LZB, the recliner retailer. So shares are down 14% right now. This is the worst intraday drop since February 2022. The retailer reported weaker than expected results, including same-store sales that declined during the quarter, which they said reflected an increasingly challenged consumer. Part of that, weak economy we've been hearing so much about.
Do they make a Lazy Boy with like a little fridge for your beers underneath, so you'd never have to get up?
That's a great question. I don't know. I don't have.
Would
I don't
you look
have
into that for me?
Yes, I will get right back to you. Definitely a cup holder in it for sure. Higher expenses also weighed on earnings per share in the quarter. For Lazy Boy.
Target.
Yep, Target ticker TGT. So shares are down. They reported earnings, which included reaffirming their sales outlook for the full year, which, everybody really has been looking for the beat and raise this quarter. So that is probably weighing on shares a little bit. But the bigger weight here is that the retailer also named a new CEO, current COO, Michael Fidelke. At least that's how I'm going to say it. I don't know if that's correct.
I'll go with it. All
right. I do the KE at the end.
Yes.
So, all right, we're going with that.
Yep.
Is going to succeed current CEO Brian Cornell. And basically, this is just being seen as too much of an insider. Like, there won't be enough change to sort of drive a turnaround at Target. Michael Baker of D.A. Davidson said there was some hope that an external CEO would be a catalyst for more significant change. And Bloomberg Intelligence's Jennifer Bartashis said he's unlikely to change Target's playbook. And so this is really overshadowing sort of any positives that they saw in the quarter.
And then bucking the trend, TJX, parent company of TJ Maxx, Marshalls, up 4%. Pretty good earnings.
Pretty good earnings. They are on track to close at a record high today, highest since at least 1980. Is that what we have here on the terminal? They raised their full year earnings per share outlook. They had better than expected results, citing that shoppers are turning to discounters due to economic uncertainty.
All right. Carmen Reinecke, thank you so much. We appreciate that. Carmen Reinecke, she covers all the stocks for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Our piece of news coming out today, getting a little bit more, visibility with President Trump tweeting that President Donald Trump has called on Federal Reserve Governor Lisa Cook to resign after Federal Housing Finance Agency Director Bill Pulte urged an investigation of Cook's mortgages. I'm guessing this is getting some play out in Jackson Hole, Wyoming. Michael McKee is there, international economics and policy correspondent for Bloomberg News with a bunch of other economists. Mike, what's the scuttlebutt out there in Jackson Hole about President Trump and Ms. Cook.
Well, it's certainly the topic of discussion this morning among those who are here. Not many people from the Fed have arrived yet, but we anticipate that most of the members of the Open Market Committee will be here, including Lisa Cook, although she could now change her mind. The whole thing is kind of a little different, but the same as the Trump policies that we've seen before. The FHFA director, Mr. Pulte, has already charged or alleged that California Senator Adam Schiff and the New York Attorney General Letitia James committed mortgage fraud, and has called on them to resign and called on the Attorney General to investigate them. And now he's doing the same with Lisa Cook, alleging that she took out a mortgage in Ann Arbor, Michigan, and pledged to make it her primary residence. Then a short time later, took out another mortgage in Georgia, pledging to make that her primary residence, and then she put it on Airbnb, so he's saying mortgage fraud. But we don't know any more about it, and we don't know if there's any defense or what defense might come from Lisa Cook. Everybody's waiting to hear from her and the Fed. So far, they've declined comment.
Mike, I just have to say, guys, because of course we're streaming on YouTube as well, live right now. That background behind you, Michael, it looks fake. It is so gorgeous.
Welcome to coverage of Jackson Hole.
Yeah.
It always looks fake, and everybody who comes out here walks out here and says, "Oh, you mean it's real?" The only problem is it's raining and it's cold today. So.
Okay. All right. Well, you know, it's still a good gig. Tell me what the markets want to hear, though, from Powell on Friday. What would make the markets happy? Give me the Goldilocks scenario.
Oh, the Goldilocks scenario would be something like what Powell said last year when he said it is time to start cutting interest rates, and then at the September meeting they cut by 50 basis points. This time, given the fact that the employment numbers were poor but the inflation numbers started to tick up, those call for two different monetary policy responses. So the Fed officials, and Jay Powell in particular, when he makes his remarks, are probably going to avoid any kind of promises about what they'll do in September and in the months going forward, leaving it open because they're still waiting for more data. Now, the absolute Goldilocks for the markets would be the story that's on the Bloomberg terminal today about the options traders who've bought into the idea of a 50 basis point cut in September that would pay off 10 to 1. So I think if you're going to hold those options, you're probably going to see them expire worthless, but maybe it's worth the punt.
So, Mike, just last before we let you go here, I mean, did the folks on the Fed, did they feel like they are personally at risk here? I mean, this is an administration that seems to be really has its sights set on members of this Fed and maybe just the Fed's impartiality in general. What's the feeling out there?
You know, I haven't talked to them about anybody in the Fed since the Lisa Cook thing, obviously, that just broke. In general, they've thought of it as the kind of political pressure that Fed officials have gotten throughout history, and they can just ignore it. But if the administration is going to go after people personally, then obviously that's going to bother people. And I don't think anybody would resign. They'll keep their backs up on this one. But it is something that I'm sure would worry them.
All right, Mike, thanks so much for joining us. We appreciate that. You and your fake background there. Michael McKee, Bloomberg International Economics and Policy Correspondent out there doing big duty out there. Tom Keene, Lisa Bromwitz will be joining him tomorrow for coverage over the next couple of days. And obviously they'll have that special on Friday morning with the Fed Chairman Jay Powell's speech on Friday coming out there from
And just
Jackson Hole.
parenthetically, you can thank the Rockefeller family for that view, because it used to be cluttered with just all sorts of detritus, old buildings and whatever.
Oh, is that right?
They bought it all up and made sure that the view is pristine. So
gorgeous.
Yeah, good props there. All right, let's get back to these markets. Lowe's is a stock that's in the news today. They reported some pretty decent numbers, and they also made a big acquisition, buying a company called, what is this called? Foundation Building. Never heard of it. $8.8 billion cash deal. Transformational deal, some analysts on Wall Street are calling it. So let's break it down with Drew Redding, Bloomberg Intelligence U.S. home building analyst. Drew, first talk to us about this acquisition that Lowe's made. What is the company and what's the upside for Lowe's here?
Yeah, this is a pretty big story today, one we weren't necessarily expecting. They announced that they're going to acquire Foundation Building Materials for $8.8 billion. They're basically a distributor of drywall, ceiling tiles, metal framing, insulation, to builders and remodelers. What's interesting is if you think about how Lowe's has traditionally attacked the professional contractor segment, it's really been through small and medium-sized contractors. That's really been their bread and butter. What this deal does is gives them access to larger scale projects. It's really the area that Home Depot has been going over the last couple of years. But now it puts Lowe's firmly in that lane and really opens up a new growth opportunity for them.
Yeah, and didn't Lowe's buy another sort of pro-type business earlier in the year? I know Home Depot did something similar. They bought GMS for over $4 billion. I wonder though what this means, Drew, for people like us who want to DIY it. Are we going to not be as catered to at the Lowe's and Home Depots of the world?
So you're right. Lowe's did just recently close on the acquisition of Artisan Design Group, who's a distributor of internal finishes, so things like countertops, flooring, and things along those lines. So now Lowe's is really able to go to large-scale contractors and builders and really provide an entire product suite on the interior of the business. In terms of DIY, I mean, DIY is still 70% of the business for Lowe's. That'll remain core to their strategy. But what I think this speaks to is the relative weakness in that segment and the need for them to look for new avenues of growth, out over the next several years. When we think about how the market is likely to unfold, and Lowe's alluded to this today during the call, we think a lot of the growth is going to come from big ticket spending that's been pent up over the last several years. And this gives them an entrance into that market somewhere where they didn't have that type of penetration before.
This may surprise you, Drew, but I'm probably the least DIY guy you'll ever find. I have people for that, Drew. But so I don't really know much about the whole Lowe's thing. Tell me about how their earnings were this quarter.
Yeah, so the earnings were really a non-event. Comps were up 1%, pretty much in line. The cadence of comps through the quarter was pretty much similar to what we heard from Home Depot. They exited at a 4.7% comp, and that really had to do with how weather evolved throughout the quarter. It obviously wouldn't be a retailer call if we didn't mention the weather. We did see an improvement in big ticket spending, which was encouraging. And I think investors were pleased to see that despite a still challenging market out there, they maintained their guidance for same-store sales for 2025, which calls for flat to up 1%. So, they did mention that the environment's still tough. We think that the big ticket DIY discretionary categories that require financing, as we discussed with Home Depot, are still relative areas of weakness. But we think both of these retailers are executing well in a challenging market.
So Drew, as our home building analyst, I just want to broaden this out for a moment and get your thoughts on this. So we saw that the gauge of future construction, right, new building permits, down more than 5.5% versus last year. But what we're seeing is sort of a divergence in the industry, right? Apartment construction is steadily climbing and not keeping pace with single family homes. What's driving that?
So a lot of it has to do with affordability. I mean, with the rise in home prices over the last 5 years, up more than 50%, rates hovering at 6.5%, there's a lot of people that simply can't afford to buy in this market. We looked at some data last quarter on household growth, and really what that showed is that all of the new household formations have been in the renter market at the expense of, owner-occupied units. And it really goes back to affordability. So I think you're right. If we look at building permits, they were actually down 8.5% on the single family side compared to last year. There was a little bit of a surprise on starts, which tend to be volatile month to month. But what we're hearing from the builders is that they're not going to keep pushing new units into a soft demand environment. We think they're going to continue to pull back on starts through the remainder of the year and into next year as they look to work through the existing inventory that's out there in the market. If you look at the new home inventory, we're at 2007 levels. So that's requiring builders to have to lean on incentives to a greater extent in order to clear that. And we think until we get through some more of that inventory, you're going to see further weakness in single family construction.
All right, Drew, excellent stuff. Appreciate it. Drew Redding, home building analyst over Bloomberg Intelligence. And folks, when we hired Drew, it was a major improvement from the analyst we had in there before. So I'll just leave it at that. Drew covers all the home building stocks for us.
Don't leave us hanging.
S&P 500 off 44 points, the Dow off 6 points, and the NASDAQ off 290 points. That's a little over 1%. Coming up, we're going to check in with Brody Ford Bloomberg tech reporter, give us the latest on Oracle. And then conversation of the morning, Danielle DiMartino booth in studio talking about the Fed. Where are we going here? She's the best. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the major averages, they have turned mixed. Still, the NASDAQ 100 down 270 points. That's a decline of 1.2% as the tech-led decline continues. But the Dow's turned around. Right now, unchanged to a little higher, about 3 points higher. You can credit Travelers Insurance and McDonald's and Visa for that turnaround in the Dow right now. S&P 500, 38 points higher. That is down 0.6%. The worst of the 11 major industry groups in the S&P 500, worst performer right now, that belongs to consumer discretionary as well as information technology. There is some worry the Fed isn't going to deliver on rate cuts that the markets are pricing in. Traders will then focus on the release of the minutes from the FOMC. We're going to get those right around 2 o'clock this afternoon, New York time. You'll recall, these are the minutes from the last meeting. You'll recall at that one, two of the Fed governors, Bowman and Waller, voted against the decision to hold rates steady, opting for a cut to try and shore up the U.S. labor market. The S&P 500 once again falling for a fourth straight day. Closely watched gauge of chip makers, that's extending a 2-day slide to almost 5% at this point. Information technology, again, the worst performing industry group among them in the S&P 500. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Paul.
John Tucker, thank you so much. We appreciate that. Alexis Christophorus, Paul Sweeney, live here with you in the Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. I was just looking at Oracle stock. What a rip it's had this year. Up 40% so far this year, just riding the cloud, the AI wave, I assume. Then I go to Rich Go, R-I-C-H Go, one of my favorite functions on the terminal. I look for our good friend Larry Ellison, the founder of Oracle. Good news, he's number 2 on the list, just behind Elon. He's at $286 billion of net worth.
Moving
but
on up.
The change year to date, he's number 1. His net worth is up $94 billion this year. So a good year for him. Unfortunate for him, he just got duped into buying a legacy media company, so he's got to deal with that. So let's break it down. What's going on at Oracle? Brody Ford joins us, tech reporter for Bloomberg News, joins us live here in our Interactive Broker Studio. What is the Oracle story here? Why is this stock ripping so much?
For so many years, Oracle was seen as this kind of legacy company like IBM or, these kind of ones that were heroes of a past era. And they've really been trying to reinvent themselves around the cloud, not always successfully. And what really changed it was AI, right? They have managed to make themselves a go-to destination for training these AI models, which requires just, incredible levels of investment, right? Tens of billions of dollars per site. And they've managed to establish themselves as the place where you go to do that, right? Companies like OpenAI, NVIDIA themselves is paying Oracle a lot of money to set up data centers for them. And so they've managed to reinvent themselves and, essentially double their stock price in the process over the last year or so.
I mean, you just said it, right? They're betting big on the cloud and on AI, spending tens of billions of dollars on these huge data centers. So talk to me about what that means in terms of longevity and margins in their cloud business.
Yeah, the margin question is a big one. We have in our story today that Chief Executive Officer Safra Catz for a long time said, y'all, I'm not sure about these margins, right? I mean, they're used to selling on-premise database software that you pay upfront for. I mean, it's one of the most great cash cow businesses in history.
Sure.
And then now you go to a business model where the margins are very slim, right? And so right now their cash flow has gone negative for the year for the first time since 1990. Wow. Wall Street anticipates that this is a spending cycle and then all the revenue starts coming in and you're able to compound at a pretty incredible degree, but it requires a level of investment that is completely unfamiliar to the average software company.
So just to give you some numbers around that, CapEx for these guys has been, for the last few years, $4, $5, $6 billion.
Yeah.
This year, forecast $25 billion. Next year, $31 billion. I mean, that leads to, as you mentioned, negative free cash flow for the first time since 1990. But it appears that tech investors today, this AI story, it's kind of build, baby, build almost.
Exactly. They want to see growth, right? Oracle, the database is effectively a stagnant business, right? I mean, they could hold on to that for a long time, likely, but that's a flat business. And so the fact that now they're going to be able to say that in 2029, this cloud is going to be our largest business line, that's a really big reversal of fortune. It requires a ton of money, but the idea is you pass it on right to customers, right? You spend tens of billions of dollars on the chips and energy, but then OpenAI comes around and gives you a deal worth tens of billions of dollars per year. And so the majority of their backlog is in this AI work, and all indications say that it should start flowing.
All right, great stuff, Brody. I mean, spend money to make money, I guess is kind of...
Larry Ellison knows it.
He knows what he's doing. All right, Brody Ford joins us here, Bloomberg Tech reporter.
you.
He knows what he's talking about. He's going to come back again, folks. All right, conversation of the day. You could go a million different ways here. Jackson Hole, I don't know why our next guest isn't in Jackson Hole. I'm sure she's got the boots. I'm sure she's got the hat and all that kind of cool stuff. Danielle DiMartino Booth, CEO, Chief Strategist at QI Research, joining us here in our Bloomberg Interactive Brokers studio. Danielle, first, let's just go to the boring stuff first. Minutes today. Anything from the Fed that we don't already know?
I don't think that there'll be any kind of look forward to subsequent data releases that we've seen, which they have in the past put in minutes, even though you would think minutes would be stuck in time. I will be interested to see, how many, several, most, a majority of FOMC committee members were concerned about inflation going into this meeting, and how many were concerned about a weakening jobs market backdrop, because you'll want to start to see the balance. It was widely broadcast that Bowman and Waller were going to be dissenting prior to the meetings. That was kind of a nothing burger for market participants. They saw that coming, and yet the language of the FOMC statement was softened. So for whom was it softened? Mm-hmm. Were there other potential dissents? And you can go on and on with the game theory here. What happens if Moran gets an expeditious confirmation in the Senate? Will there be sufficient numbers of doves, depending on how non-farm payrolls hit on September the 5th, to potentially have a majority dissent on September the 17th, calling for an extra large rate cut? We don't know, but we do know that that statement was not changed because of Bowman or Waller. Somebody else there was very uncomfortable with not beginning to ease again in July.
Yeah, first time we had dissenters in 30 years.
Double, yes.
Right? Yeah. Right. So do you think we're going to hear from Powell? Will he sound more Volcker-esque or more Greenspan-y when he speaks on Friday?
You're speaking Danielle's language.
Yeah, it's really, really hard to say. He'll want to wax Volcker, but I don't think he wants to upset markets that much. Mm-hmm. I don't think we're going to necessarily see Dirty Harry Powell at the podium, who we did see a few years ago at Jackson Hole. You got up and it was like 8.5 minutes and goodbye. But I know that he needs to introduce some kind of nuance, some kind of placating for other members on the committee pending this big payrolls report. And I think everything hinges on it, and therein lies the irony, because we don't know if market participants are going to take the data at face value when it's reported.
Well, after that huge revision.
Well, after the huge revision, and we've also had a change in terms of who's the commissioner now running the Bureau of Labor Statistics. Are market participants going to say, gee, it was biased one way in one direction, now it's maybe biased in a different direction? And could President Trump and Treasury Secretary Scott Bessent shoot themselves in the foot if they insist on a really strong payrolls report that puts all the doves on the sideline saying, we're good with 25 basis points?
Mm-hmm.
We had a lot of inflation data last week, Danielle, and a lot of people are I think a lot of market participants are just trying to figure out where in the economy is this tariff-induced inflation. Maybe there isn't any. I have no idea.
Good question.
But we didn't see it really
because
at the
it's really not popping up in a material way yet.
I know. We saw the PPI came in hotter. So how do you think about it?
It's not popping up yet for the consumer. I think we've seen tones of that in what Target has reported to date. It's very difficult to pass along any kind of price increases. Some of the biggest price increases we're seeing due to tariffs are in furniture and recreational vehicles, two areas of consumer spending that are on their knees. So good luck passing those through, even though if you're a producer, you must shoulder those higher input costs. So it becomes more of a margin squeeze story at this juncture. One of the biggest drivers of the PPI coming in hotter than what was expected were portfolio management fees, which are just a reflection of assets under management in the stock market, which just means stocks go up, the PPI go up. That feeds into the PCE, which is on everybody's radar, of course.
So what you're saying is a lot of these companies are indeed doing what the president wanted them to do, which is eat the tariffs.
Well, I certainly don't think he would use those words.
Well, the other countries are paying the tariffs.
And there's something to be said for the fact that none of this is decided by the courts yet. Mm-hmm. Companies are really pushing back, and listening to the legal experts, there's no guarantee that corporate America does not prevail in reversing these tariffs.
How do you think the consumer's doing out there, Danielle?
I don't think the consumer's doing all that well. I mean, we really are seeing a big ramping up in delinquencies, in bankruptcy filings, and it's accelerating as the year goes on. We're seeing, delinquencies and distress go up the income chain, up the income ladder, as student loan repayments begin to filter through to some of the higher income earners in the country. So I think the consumer's in a very tenuous place when, as your last guest was talking about artificial intelligence, AI data center, when AI spending is a greater contributor to the economy than consumption, when GDP is 70% consumption, you say, whoa, wait a minute, the consumer's really struggling here.
Yeah. And the consumer's been the pillar of this economy for so long.
Absolutely.
Are we sort of not paying enough attention to that rise in those delinquency rates, do you think?
I don't think we are. I don't think we're paying enough attention to the millions upon millions of gig workers out there who are struggling to get by, to record numbers of multiple job holders, to record levels of multi-generational household formation, to the highest percentage of young adults living with their parents since the Great Depression. This is all documented data, but it's also a sign of underlying household distress, not being able to make ends meet unless you take extraordinary measures, and I don't think we're paying close enough attention to that.
And thanks to Danielle, she turned me on to this bankruptcy dashboard, BCY Go.
BCY Go.
It's a good way to kind of track it. All right, Danielle, you're based in Dallas, Texas. I like to ask you periodically, things still ripping down in Dallas, Texas, economy-wise?
Well, Y'all Street seems to be proceeding as expected, so Dallas is very excited about that. That being said, our home sales are on their knees. Home prices are falling. It's very much a bifurcated economy. Austin's reeling.
Yeah.
Is that just the hangover from the last 3, 4, 5 years?
To a certain degree, but again, Dallas is very much a microcosm of the K-shaped economy that we've seen in the United States, and there are a lot of struggling families, which is why we're seeing, again, home prices fall throughout the Metroplex.
Interesting. Okay. Yeah, it seems like every company I know is moving to Dallas or somewhere in Texas.
Wait, before we let you go, if you were a betting woman, what happens at the September meeting? Do we get the cut and by how big?
I think we for sure get 25 basis points. I have no idea what Antoni's going to pull out of his hat for non-farm payrolls. I couldn't guess that in a million years.
Right.
But if it's a continuation of weak payrolls data, I think we do see 50 basis points.
All right, Danielle DiMartino Booth, CEO and Chief Strategist, QI Research. Always appreciate getting a few minutes of her time. She was on the Fed down in Dallas, so she knows of what she speaks. A lot more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The major averages mixed to lower. The tech sell-off, that continues with the NASDAQ Composite Index down 1%, a slide of 224 points after yesterday's decline of just about 1.5%. S&P 500, 32 points lower. That's down 0.5%. And right now, the Dow Jones Industrial Average getting a lift from travelers up just 2 points right now. Again, after that tech sell-off yesterday, shares of NVIDIA, they are lower again today, down 1.7%. The Mag 7 Bloomberg Mag 7 Index, that is down 1.5%. And then you have Target shares. They are slumping, down 7.8%. Wall Street was hoping for an outsider to take over the company leadership. Instead, they got the current chief operating officer. Target, by the way, also maintained its full-year guidance. Lowe's reporting second quarter adjusted earnings per share above what analysts expected. They're also buying foundation building materials. The price tag there, $8.8 billion in cash. They're trying to serve more of the professional customers. And Brian Nick, meantime, at New Edge Wealth, says he sees some early warning signs in the U.S. economy.
I'm concerned that we have 4 rate cuts baked in for the next year, and long-term interest rates really haven't come down much at all, and mortgage rates haven't started to come down. We're seeing people start to pull homes that they've listed off of the market in an increasing way, and that's not a healthy sign for the housing market.
Well, speaking of the housing market, Danielle also mentioned it. A look at James Hardie shares. They are down right now close to 35% after the building materials maker, they reported net sales that missed analyst expectations. Now, the company also warned of weak demand